All right, so this series is going to be strictly, sorry, it's like so bright over there. This series is going to be like strictly educational. So I'm going to show you guys basically everything it is throughout my entire process from start to finish. Now, if you have any questions on literally anything in any of these videos, because it's going to be multiple parts, it'll be like, I don't know, 5 to 10 videos, for example. If you have any questions on any of it, just let me know in the comments. And then at the end, I'm going to go through and just make a video like answering every single question. So no matter what it is, just follow along. And if you get stuck on something, let me know in the comments. And then, I'll make a video kind of covering that. But let's start off with where the hell is TC2000? There we go. Okay, so we're going to start. This is going to be a pretty basic like introduction in the beginning. If you don't know who I am, I'm a swing trader. So I've studied a lot of people in this space that have made a very large amount of money trading stocks, and I've been able to do the same. So I've made millions of dollars. I'm 23 years old. Basically, I'm just going to share with you guys literally everything that I know. I'm going to give you my full setup. So I'm going to show you how to set this program up, how to get all the indicators, how to get everything set up, my whole process. But the main thing, now this is a very important step, is I really want you guys to use this program. This is TC2000. A lot of guys will be like, oh, you're on paper trading, you're paper practice, right? It says that up here. This is just my charting platform. So I just view stocks on here. This is literally just where I view the stocks. This is where I find the stocks. This is where I build the watch list. And, I watch and I see how these things act, and I watch them throughout the day. I check out the different time frames to do all that. This is my monitoring. This is where I view all the stocks. Now, when it comes to actually placing a trade, I use Webull for that. I'll have links in the description for everything. So to set up a Webull account, set up TC2000. Webull, it's just a broker. So you just buy and sell in there, modify your positions, manage your stop losses, everything. But on here, this is where, I find all the stuff. This is where I look at everything. I got all these tools up here, all these scans. I got these little things. So I'm going to show you how to add all this stuff and just make it pretty simple. I've got some notes here. So in this one, we're just going to be setting up the TC2000 layout. I'll talk maybe a little bit briefly on the broker, basically what you should do in terms of account type and things like that. Let's see. Indicators and how the tabs work. So I'll show you a little bit around this program. It does look like Chinese. It's a little bit intimidating at first, and I was definitely scared at first. Setting up the toolbar, so I'll show you how to do that, and then the risk calculator. So this will tell you, how many shares to buy, where to put your stop loss. This will show you everything. I got a really solid system here. So starting off with TC2000. Now, I'm going to have a link in the description of this video that says my TC2000 layout. It'll bring you to my website. You're going to click get the layout. Once you get the layout, obviously, you need to download this program. But that document, when you click get the layout, it'll open this document that shows you how to set up TC2000, what package you should have. I think it's about $40 or $50 a month. It is so worth it. I think that's like a couple bucks a day, right? It's not bad at all. This program has done so much more for me than any other program has. I used to use FinViz at first. I was trying to find stocks on there, trying to build scanners on there, and then I used TradingView. And I just basically realized that nothing is ever going to beat this program because of the customizability, whatever the hell it's called. The customization aspect of it is just great, and all the stuff that you can do is great, and I've not found a platform that beats it. So it's a one of one, right? This cannot be replicated by another platform, so I would not recommend that you use something else. If you are going to use something else, TradingView isn't a horrible option. There is ways to set up like scans and stuff on there, because scanning is very important, and that all makes sense, as we go along with this, but it's not recommended. And the reason it's not recommended is because the filtration on this is so much better. And like I said, there's just way more you can do with it. So for example, this scan, right? I've got all this stuff in here, so I can filter all this stuff out and, type in different little codes and basically create things on here. So this is the program that you should definitely have. Now, if you're not going to, let's just go over the indicators. So when it comes to looking at a stock, I look for my setups and I look at a stock on the daily charts. On the left here is going to be the daily chart. On the right here, I have the hourly. Now up here, I also have different tabs and time frames. So we can, switch to the 4-hour here by clicking these buttons, or I already have this set up for you. So the daily has the indicators already added. The weekly will have its own indicators added, which is why I have the tabs. If I switch this to the daily here, now it only has the 10 and 30. But if I switch it, here by tab, now the daily has these different indicators. So that's why I have it set up like that. And on the right, I have the hourly chart, and then I have the 5-minute and the 1-minute. I mainly use the 1 hour, the 1 minute, and the 1 day. And then I have my alert console. So this is where I set all my price alerts. I can click on this stock and see. Now I have a price alert set for this previous day high. As soon as it breaks through there, beep, That thing will be loud. It's a loud beep. I've also got, I don't know if you guys have seen my setup. I got some huge speakers, so I don't miss a single alert, basically. But yeah, you can see already, kind of what it is that I'm doing. I'm looking at the daily chart here. The hourly chart is just a magnifying glass of what's going on here, right? So it's like if I wanted to zoom in like this, it's not going to tell me anything else other than just get me closer to it. If I want to really magnify it and get a better picture of what's going on, it's exactly how I would do it, just looking at this right there. So that is, a little bit of basics. Now, as far as indicators go, like I said, if you're going to use a different platform, again, I really don't recommend it. I really think you should get this program. But it's the 10, the 20, the 50, and the 200 simple moving average. That's about all you need on the daily chart. You don't really need this on any other time frames. Moving averages wise, I have it on here just for like visual appearance. I don't use them on here. I don't really use anything other than that. And then on the 5 minute and the 1 minute, you should have VWAP. So that's pretty much it for indicators. And then at the bottom, I also have, let me move this. At the bottom here, I have volume and the 22 EMA. So I have volume on every time frame, and then I have a moving average on it on the daily just to see the average daily volume over the last month. You don't need the moving average, but I just like to have it. And then over here, I have all my scans and stuff. So when you click these arrows, you see these arrows I'm clicking, this will bring you to the scans. A lot of people open it up and they only see this and they're like, I don't have all the stuff you have. Well, you have to click on these arrows, right? So you got to go through this. Now, I'll show you how to use all this stuff, as we go on, but for now, just get used to this program and just click some buttons. And then here, is the results of the scan. So if I click on the volume scan, right, I always sort by dollar volume, and then I can see all the stuff that's going on the volume scan. So I can see here, 1 of 40 items. So there's 40 stocks popping up on this list, and I can use the arrow keys, the up and down, to kind of, go up and down, right? Pretty self-explanatory. Then also the brackets allow me to go left and right by one candle. I think you can do like shift bracket, and it moves a little bit more. There's also this down here. This took me so long to find. I never found this until like recently, but see this little like scroll bar down here that I'm clicking on? Right around here, this area. If you click on it, it turns orange. If you don't, it's just like a thin line. But you can like go back on the chart like that. So that way it doesn't do anything or like mess with your scaling or anything. Wow, do I have quite the haircut at the moment. Sick. What else do we have? So how to add ADR. So a lot of people don't understand how to add average daily range. So average daily range tells you how fast the stock moves per day. This is an average over the last 30 days. And basically what this is average daily range percent. So on average, this stock moves 11.92% per day. I like stocks to move faster than 5% per day, nothing less. So this shows me the ADR. I also have it here on here. I even got it here. You'll see I got ADR everywhere. I don't need it everywhere, but I do. Not sure why, but I do. So that's that. And then adding this, a lot of people don't understand how to do that. So essentially what you'll do is, I have this on the document, by the way, but you go to new, condition, PCF formula, and you're going to type in ADR percent, right? So now we have, let me move this camera. We'll just put it right here for now. It doesn't have to be pretty. So ADR percent, right? That is going to be the title of this. Now we type in our ADR code, right? I have it there. You can copy and paste it from that document. And then you'll click this save icon, and then you'll see it pop up as this again, ADR percent, and then you click save. So you'll save it there, and then you'll press OK. It'll say this formula does not return a Boolean result or something weird. Just press OK, and then just keep doing that. Make sure you type the name here, you type this, and then you press the save icon, and then it'll say like something. You press OK, something, OK, whatever. Click this, OK. But make sure that's the first thing you press after typing all this in, or else it won't save. Now, once you have it saved, you're going to add it to the toolbar up here. So you'll have a couple more things here, like some green stuff, maybe some red stuff. There's a couple more numbers. It's like open, high, low, close. I deleted those. I just have these two, which I don't even look at these. I really just look at earnings, ADR, and market cap. So to add that, you're going to go up here, right-click, edit toolbar, and then you can see here, we click on this orange plus right here. That's where we type in earnings, which is next earnings. So we type in next earnings. Boom, you add it there. You type in ADR or whatever you titled the formula. ADR pops up right there. You can add it. You can see I've added it multiple times, for example, just showing people. And then market cap, which is capitalization. So capitalization is here, which is market cap. And now to title these things, on this I have bold and italics, and then I have a space or no, I don't have a space actually. I have just this line, this weird line thing. I don't know what it's called. And then a space, and then I say earnings. And then I have a space at the end of earnings. And then on suffix, I have a space and then the line and then no space after that. And then here, I have no space in the beginning, ADR%, and then I have a space at the end of ADR%. And then here, I have a space and then the line. And then market cap, I have no space before cap, and then cap, and then a space, and then no suffix on that. So that way, it just kind of gives these little dividers. It's like a way to just format it. You can also change the size on this if you want this stuff bigger. If you want to mess with it, you don't have to make it, like, have those lines. Yeah, hopefully you can't hear that dog barking. That thing's been pissing me off. I might turn it into a soccer ball pretty soon. But, yeah, hopefully, you can mess with it and figure it out, right? It's not that difficult. It doesn't have to be pretty as long as you can see what's going on. But, yeah, that's pretty much it as far as, like, setting up TC2000. It's very straightforward. And then when you open my layout, it'll have everything there. Also, I have this flagged list, so I have my main watch list, then I have my flagged list. This is a little bit more advanced, but if you want to use this, make sure that this is clicked to flagged items. If not, it won't work. So here you can see UCTT. If I unflag the item here, boom, the stock has gone off the list. If I add it here, I flag it right there. That sounded like a profanity word, but then it just goes right there. So it adds it to the list. Now, as far as moving things to the watch list here, I click the little blue plus, blah, 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 right? I type it in there, type in the ticker, click add, and it adds it to this list. If I want to remove it, I right-click it, and I click remove. You can also drag them. If I find something from a scan, I can just drag it over to here, but you can't do that with items on the flagged list because these are only shown when they're flagged. So this is just a focus list. This is a flagged list. You can create a new watch list anytime by clicking here, personal watch list, title it whatever you want, and then go from there. And to move these windows, there's this here. You can move stuff around, put it wherever you want. You can mess with it. Just mess with the program a little bit. This is my positions list. So I got my positions, my watch list, and I got the scans up here. I watch the volume scan throughout the day. Like I said, I'll show you kind of what all that is and my process and everything. And then down here we have the risk calculator. Now this is pretty important. So risk calculator, shares to buy 1% risk. I never risk more than 1% per trade. I don't recommend that you do. You can have a dynamic risk or you can have a flat rate. If you choose to risk 1% per trade, you would simply just type into your broker whatever it's saying to buy, put your stop loss, and that'll tell you how much money that's going to cost you. So if this is a $100,000 account, we're going to click here. So we right-click here on shares to buy 1% risk. I see some people accidentally click this edit button sometimes, and it makes it all funky. So make sure the edit button's not clicked, but right-click here, then click edit on that first line, which is shares to buy 1% risk. And this first value is going to be set at $1,000 for you. So that's if you have $100,000. That's 1% of your account. So depending on what your account size is, if you have $10,000, you put 100 in here. So just take a zero off, right? But don't change anything else. So that's risk divided by current minus low of day. Then we have the stop loss low of day. You don't need to edit that. That's perfectly fine. Very simple code. Check this out. A big old L right there. And then dollar amount of position. Right click, edit this one. Change the first value again, so to whatever 1% of your account is. This way, it'll tell you, how many shares to buy, where to put your stop loss, and how much that's going to cost you. So it's very straightforward. It might be off a little bit here and there. Like you might be risking, I don't know, 50, 20 bucks more or 50, 20 bucks less, something like that. It's not going to be like perfect to the penny, but usually, let's say if this says 114, I'll just buy 100, for example. Or if it says 100 and I want to risk more, then I'll just buy 200 or something. I'll just double it. Obviously I wouldn't be risking that much. I wouldn't be risking more than 1% of my account, but just for example. So you just play with this, and then on your broker, you go over it, you type it in. I'm not going to make a video on like setting up the broker and everything because a lot of people are going to have different brokers, but I will make some recommendations. So as far as recommendations for a broker, if you are in the UK or Europe or anything like that, I believe Interactive Brokers is probably going to be your best option. If you have $30,000 or less, you should be using a cash account. The reason I say that is because the PDT rule is at $25,000. You want to give yourself a little bit of room. So $25,000, let's say you pull back $1. Now you're restricted by the PDT rule. So it's just totally not worth it, right? You want to make sure you give yourself a little bit of room. Once you hit 30,000, then you can be on a margin account. Margin account has instant settlement, no like day trade restrictions. Just has all the benefits. Of course, you have margin. People are scared of margin accounts because they think like, oh, doesn't that mean I'm taking a loan, or doesn't that mean I'm going to be using the margin? You don't have to use the margin. all you have to do is look at your cash balance, and it's the same as your buying power. But if you're over $30,000, then yes, please use a margin account. What else do I got? Risk calculator, toolbar, how to add the ADR formula, indicator and how the tabs work, broker, setting up my TC list layout. Yeah, I did all that. Okay, so yeah, as far as broker and everything, if you're in America, Webull is great because it has a really good mobile platform. So when I want to go to the gym and I don't want to sit here and wait all day, then I can just go to the gym and I can just press the buttons on my phone, right? I have a good idea of what it is that I'm doing. I don't really need to see the chart to know how I want to manage the position, so I can just manage the position from my phone. A lot of brokers don't have the best mobile platforms. Webull has a really good one. There are a lot out there that are good, but I've found that Webull is very, very simple and very easy for a lot of people, especially beginners or just, anyone in general. It's pretty good. And then for, like I said, anyone in Europe or out of the country or out of the USA, use Interactive Brokers. 16 minutes. What else do I have? Oh, good idea. All right, so let's go over some of my statistics. So a lot of people, obviously if you're watching this stuff, you want to make sure that this isn't just a complete waste of time. Maybe it might be a little bit waste of time if you're not going to use this information, because that would be a total waste of time. You should 100% use this information. But let's go over some statistics real quick. I can't even... Here we go. Okay, so we're going to go over some statistics real quick. So starting off with, legitimacy. Am I legit? Do I know what I'm talking about? So I have a Discord community. A lot of you guys know that. A lot of you guys are watching this video from the Discord community. This is you guys are who I'm making this video for. So if you found this and you're not in the Discord, what are you doing with your life? Discord is a great place. But in my Discord, I alert every single trade that I take. I tell you how much I'm risking. I show you where the stop loss is. So the results of that, let's go over that. Because I could say I made X amount of dollars. But this is all proof. So a member of the Discord was like, hey, look, I like the stuff you posted. I understand all this stuff seems legit, and I could just take your word for it. But I'm going to go through every single alert that you've posted since you made the Discord. So here we have 11/13/2023, which is pretty much the start of that. And I'm going to add this all into a sheet, and I'm going to figure out if you actually made money. So that's basically what this is. Now, we can see a lot of things come from this, but the main thing that we're looking at is you see a lot of red, right? I lose a lot. I have a very low win rate, but my winners are very high. So for me to lose, let's say right here, 1, 2, 3, 4, 5, 6, 7, 8, 9 times. Let's say I'm risking 1% per trade. I'm down 9% in that scenario. Now let's say I win this one. Now I'm down 7.5, I think. Yeah, 7.5 because I made 1.5. Now I lose a little more. Where are we at now? 6.5 or something. Yeah, 6.5. I don't even know. For some reason I can't add this. But and then 5.6. So let's just say, boom, we're up we're down 1% now. And then we lose another. We're down 2%. And then we make 11%. So you can see at that point, my winners. I'm being a little stupid here. I don't know why I can't think for some reason right now. But my winners are much bigger than my losses. That's basically my whole point of that. And you can see I go on a lot of losing streaks, so I lose a lot. This system is going to be, a little bit challenging on the mental, which I don't know if I really want to get into the mindset side of things and be oh, here's how you do this and do that. Maybe I will for the final video of this series, or when I'm going over the questions, because I'm sure you guys might have some questions on that. If you do and you have a specific scenario, that helps a lot, so let me know in the comments. But you can see a lot of losses, right? And overall, this results in, let's see where we're currently at. In the last 2 years, this results in, you can see a 246.93% gain. I personally have made more than that. This is just from the alerts. But yeah, if you start with $100,000 about 2 years ago, you'd end up with about $346,000. Is that the craziest thing in the world? Absolutely not, but it's very profitable, and you make a lot of money. A lot of people that will come on here and try to teach information don't even have $1 of profit to show for it. And a lot of them will just say, well, just trust me, bro. And that's kind of in the position where I was until, the member came along and made all this stuff, and we have a really great tool. So we've got a lot of good stuff out of this. Win rate, let's look at my win rate. Overall, we're sitting at 25.4%. So I win 25% of the time. I lose 75% of the time. I lose a lot, but I make money. As you can see, about 3.5 times my money in 2 years. Is that the best? Again, no, that's not. I have made more than that, but this is based on the entries from the Discord. So it takes me a little bit to type out the alert, right? That affects some stuff. But anyways, you can see, like, obviously I'm not bullshitting you. I'm not sitting here and, lying to you. Basically, if you double your $1,000 10 times, you end up with $1 million. So, you double a couple $100,000 a couple times and you make a lot of money. So I've done that for quite a while. I've been doing this for almost 7 years now, which is crazy to think. But, yeah, got about like 2 years of proof for here. 2 and a couple months, 2 years and some change, right? But I got some proof for you here. At least you're not wasting your time. If you don't believe me, you don't believe me. But all this stuff should make some pretty good sense, and I'm going to get real in depth on it. And like I said, if you guys have any questions, then let me know in the comments, and that's going to be the last video. So this whole series is basically, my plan is to get you from start to finish. Like, not finish, like you're not going to be a billionaire by the end of this, but like starting with like little to no knowledge to now actually being able to like follow along and, make some good money, hopefully. But yeah, that's about it for this series. Like I said, everything will be linked in the description. It'll be linked in the description of every video. But that is it for this one. And then the next one, we're going to go over the breakout setup. So I'm going to show you guys, a little bit of how stocks move, and just kind of get into like the trading aspect. So we got you set up with all the charts and everything. Now it's time to figure out how to actually know what to look for and how to find all that stuff. Will come with time. But right now, yeah, that's good. All right, I will see you guys in the next one. All right, what's up, fellas? So I'm uploading the other one right now. It's checking something on YouTube. I don't understand what YouTube is checking and why they need to check so many things, but it takes me like 40 minutes to upload a 20-minute video. I don't know if that's my internet, my PC, or what. Maybe I got to upgrade that, but I don't post too much anyway. Anyways, I don't know what I'm talking about. So this is going to be the breakout setup. So I'm going to show you guys a little bit of how stocks move, show you guys a little bit of how strategies are created, how strategies are built, how institutions and funds actually accumulate stocks, because it's not from a fair value gap. And, I really want you guys to know that throughout this whole thing, don't ever use a funded account. Don't ever fall victim to any of the bullshit you see on the internet. I've made a lot of money doing this, and I know what works. And I have not made a lot of money from affiliate codes and stuff like that. I've genuinely made a lot of money from trading. So I know it works. A lot of you guys obviously have been following me for a while, and you understand that. I know what it is that I'm talking about. But if you're new here, that's kind of who I'm talking to, I guess. So let's go over the breakout setup. So we're going to get out the crafty drawing tools. Awesome. What is that, Nody? Oh, okay. All right. So basically, the way that stocks act is, there's a couple ways. So there's 2 ways that strategies are built, based on trend following. So trend following would be kind of something like this. You get the initial trend here, and then you want to buy the stock somewhere in this period in basically assumption that the trend is going to continue, right? So it goes up, it trends initially, and then it pulls back, and then you buy it when it starts to trend up again, basically. And you want to see that that trend is continuing the whole time. So if the stock, for example, is going up and then it goes down, it's not really trending anymore. Like if it goes up again, this is like a short-term downtrend here. This is an uptrend. You want to see if that trend continues to be held. So usually we see that in this form of like a stair-step sort of pattern. And that's basically trend following, momentum. A lot of strategies are built on that. A lot of the very successful ones, a lot of the very common ones. And there's mean reversions. So mean reversions are, kind of what we just saw with gold and silver. Stock that gets very extended, right? It gets really, really extended here, and then it kind of peaks. It gets very euphoric, and then it just comes falling back down. So you're essentially trading this move, this sharp move, right, from here to here. Or it could be inverse. The stock could be plummeting down and then make a bounce back like that. So a very sharp turnaround point of the stock. Now, I'm going to show you guys multiple different setups. I'm going to show you 2 trend following setups, and then I'm going to show you 1 mean reversion setup. So the first setup that we're going to go over, which is going to be kind of what this whole series is about, as you can see, the breakout Bible, is the breakout. So the breakout is essentially, you have a stock that starts trending up, and then it pulls back. Now, when a stock pulls back, the main thing we want to see is a range like this. So the criteria for a breakout is a big initial move up over multiple days, not just a day of like, a stock going straight up. A very strong trending stock, for example. I'll show you some examples of that, but basically you want to see a big move up. So this should be 30% or more. I find that it's usually around like the 100% or more mark, actually. But, a big move up initially. And then you want to see that the stock pulls back. Now, as it pulls back, there's something really important here. You want to see these higher lows. Higher lows are so important because that indicates that the stock is still trending up, right? If we had a stock that was going up, and then it started doing this, right? This is no longer trending up. It's actually trending down. It's creating lower lows. And I'm going to show you a lot of examples because that's a very brief concept, but we want to see higher lows and typically lower highs. Now, we can see it where it has a flat top and higher lows, so it kind of, goes up, and does something like this. But you typically want to see either a flat top and higher lows or lower highs and higher lows. I don't know why saying lower highs and higher lows is like so confusing for my brain. I always get it mixed up. But yeah, that's basically what we're doing. And so we look for the stocks when they're in this period, right? We look for the stocks in this period right here. We want to see that they're trending up, and then we wait for them to pull back. So when I see a very, very strong stock, this is when I'm looking at the stock. I'm not looking at the stock right here. Obviously, I still am, but I'm not like finding it here. I'm not looking for stocks in this period. I'm looking for stocks that are in this period, the very strong ones that are trending up, the ones gaining a lot of momentum, the strong trend, hence the reason momentum trend following. And then we see that it pulls back and builds a range. The higher lows are pretty important, and the lower highs are semi-important. Like I said, you can also have a flat top to it. And then we wait for it to break out. So when a stock is breaking out and this trend is continuing after a consolidation or a pullback, we try to buy this very early. So our goal is to buy it really quickly here. As soon as it's breaking this range, right? We want to buy it. And our stop loss always goes at the low of the day. So that way we get, a buy right around here and a stop right around there. Now, the big thing about this is that we get a very, very small risk, right? So let's paint this, or let me paint this freaking red. We're going to paint this red. So this is our little bit of risk, right? We'll draw this box out. This is our risk, and our goal is to get all of this reward. So you guys saw my risk to reward is freaking crazy, right? I get a lot of good risk to reward. So we want to keep our risk very minimal and our reward very big. Now, in order to get this, there's a couple things that you have to understand. First, you got to understand, oh, shit, I just knocked myself out with the chair. First, you got to understand that you're going to have a low win rate. A low win rate is pretty much inevitable with a system like this. The bigger your average winner is, the lower your win rate is going to be. When you have people on the internet that are claiming these 90% win rates and, very big winners, and they're making millions of bucks a week, they are so full of shit because I've been doing this for a while, and trust me, I would have figured it out. Maybe I'm just too stupid, or for some reason all the successful traders haven't figured it out either, and they do it all this way. I don't know, but you're going to have a low win rate, and then also, there's another thing that you want to know. You got to understand that in order to catch these big winners, you got to hold the trade out. And I say that with a lot of emphasis because that is a very, very difficult part about this. When I first started doing this, I would say, I would run into, you guys saw let's just do this, for example. So we're going to say that these are winning trades, right? So the green is a winning trade. The red are losing trades. So let's say I lose here, right? I lose 1%, or 1, 2, 3, 4, 5, 6, 7. I lose 7 trades in a row. I have 7 losing trades with a little bit of risk, right? So maybe I lose 1% per trade. I'm down 7% in this scenario. And then in order for me to make money, this has to be a 7x times my risk or more. So this has to be 7 times my risk or more for me to make money after losing these 7 trades. So obviously that's pretty big, right? Now, in order to be able to hold that out, you got to have some balls. And I'm going to show you guys a really good system that's going to allow you to hold these stocks out really, really easily where you don't even have to guess. But the one thing that I used to struggle with was I would have a lot of losing trades, and I would see a trade start to make me some money, so it would go up a little bit, and then I'm like, all right, I just lost a lot, I got to lock in these profits. Because some of these before, let's say trade 1 was just a straight loss. I bought it, and then it just went straight down, hit my stop loss. Trade 2, let's say trade 2, actually started going green a little bit in the beginning, right? But I didn't take any profits because it wasn't time to take profits yet. And then it came down, and it stopped me out right there. So that became a losing trade, right? Then I'm like, oh, shit. Okay, I know what I need to do, right? This is what I initially thought. I got to take profits here when it's green. But that's not the case because this isn't a big enough winner for you to take profits. This is not a large enough risk multiple for you to be taking profits on it. Could you? I mean, sure, but the issue with taking the profits here is that you miss out on if the stock actually continues higher, and a lot of times they do. So when I would get a successful trade after, let's say, 7 losses, and I get this green one, it starts to go green here, I would buy this one, right? So I'm like, oh, shit. It's going up, it's going up. I'm like, oh, I got to take the profits. I'm at, maybe 2-3 times my risk. I'm like, I got to take the profits. I got to just lock it in, right? And I end up locking it in here. Now, that's like, let's say 2 to 3 times my risk. And then I see it just keep going higher. And I'm like, oh my God. Like, the one that I cut it early and take the profits early is the one that just keeps going higher. And that's an issue that I kept running into. And I was like, why? Like, why is it always like that? It seems like you're doing everything like completely wrong, or like you're perfectly timing it wrong, if that makes sense. So I would take the profits early, and then I wouldn't hold the trade out long enough. So that was a big, big mistake. And it would honestly just result in, more red. So I would just end up, sure, I make a little bit here, but I'm still in the negatives. If this is a 4 times risk trade, I needed it to be a 7 times risk trade. So I'm not making any money by taking the profits here. Is that a horrible thing? I mean, in some cases, right, you might have taken the profits here and the stock turns around and then it loses. And then you're like, oh, look at me, I'm a magician. I took the profits right on time. But no, you got to hold them out. And you need a system that's actually going to allow you to, or it's actually going to tell you, when to take the profits. So that's kind of what I was set out to figure out was, why do I keep losing? And then the one time it's a winning trade, I take the profits early, and that one would have made back all the money that I lost and some. I think I'm going pretty off topic, but hopefully that makes sense because that's a very important part of it. I know I said I wasn't really going to touch on like the psychology of things, but that's just like the little psychology lesson that I'll give you. Let's go ahead and make a new one. All right, so back to the breakout setup. Now, the breakout setup, right, I went a little off topic, but the breakout setup is a stock that makes a big move up. It pulls back, builds a good range like this, and then breaks out. So in order for us to find a good stock, we need to catch the stock here when it's rising and gaining momentum. This should be a 30% move or more, and then we want to see an orderly pullback. Now, those moving averages, remember I showed you guys those moving averages, right? So that just reflects price over time. Now, the moving averages should be inclining as well. The most important ones are going to be the 10 and the 20. We want to see if the moving averages are inclining like this, and then we see that the stock pulls back to these moving averages, creates higher lows and lower highs, and starts to pinch right here. Not always is it going to have that lower high. Remember, it might just be higher lows, but it starts to pinch, and then, we usually get some thin candles around here, and then this is the breakout right here. So this is the point. As soon as it's breaking through that range, we want to buy it as quick as possible. Buy it right around here, stop loss at the low of the day. And then we hold this out until it eventually, closes under the 10-day simple moving average. So let's say this thing catches up. This stock will eventually meet here and close under there, and this is where we would sell it. So I'll show you some real examples of that. Let's go over to the chart. But that's basically like, the criteria for it. Let me see what I got as far as examples. I have some written down. Man, I'm just a grandpa at using this stuff. What examples do I have? All right, so we are going to go over a couple of these examples that I got here. What do we start with? I'm going to move this camera over here. That way you can see everything. We're going to start with DXYZ because it's a really good looking setup. DXYZ. So looking at this chart on the daily chart. Now I'm always looking at the daily chart, and then I got the hourly. It's my little magnifying glass, right? Zooming into whatever's going on here. DXYZ, if we go back here, I don't know if the hourly will allow me. It won't let me go that far. So ignore the hourly for now. Mainly focus on the daily, what we got here on the left. Now, DXYZ gained a ton of momentum here. So this is the daily chart. We see that this thing moved up 350% in 6 days, right? So very, very quick, right? Very quick. It's not always like that. Usually it's a couple months, or usually it's a couple weeks, sometimes a couple months that these stocks are growing. And I'll show you another good example after this, which is going to be silver. But we see, a very big move up in a short period of time. Very strong. You want to see if this stock is stronger than majority of the other stocks in the market. So at the time in November 2024, I mean, not many stocks were going up 350% in 6 days, right? Not many stocks were looking this good. Then we have the moving averages all in order. So the 10, the 20, and the 50. This stock was not 200 days old, so the 200 was not there. We can see the 200 starts over here. So this is where it was like 200 days old. But back here, or 200 bars, sorry. But back here, we can see, a very good looking range. So it makes that big move up, pulls back to the 10. These moving averages are all inclining. Everything looks good. Pulls back to the 10 here, bounces off the 10, and then just creates these higher lows the entire time. Would you look at that right there? And lower highs. So overall, this stock is tightening up a lot. Now, as this stock is tightening, move this up here. As this stock is tightening, right, building this range, higher lows, lower highs, pulls back, starts to look good. We get some thin candles. Typically, you see a thin candle right before breakout day. And also, the volume is dropping off. So the volume, you can see, is trickling down slowly but surely. And this is kind of, building a trend line in itself. So when it breaks out, look at that. Volume breaks through it as well as the stock breaks out right here. So we can see it's breaking through this line. Now, when you get a thin candle, right before the breakout day, you can use that previous day's high to enter. So that is the day that we would want to buy it, right? Actually, let me go over the entries in a second. I think, what do I have? No, we'll do that. We'll do that in a second. So the main part is going to be, we're going to look at a couple setups. So that is the setup, right? And it breaks out right there. So big move up. It pulls back to the moving average here, but doesn't build a range. Then it bounces up a little bit. So basically, we have that big initial move. It should pull back a little bit and then go up a little less, pull back a little bit less, go up a little less, pull back a little bit less, go up a little bit less. And overall, it creates these higher lows and these lower highs. So it just kind of ping-pongs throughout that range, and that's exactly what it does here. You can see big move up, pulls back, goes up a little, and just ping-pongs, right, and just tightens up. So eventually, it's just tightening up completely, and then it breaks out. So the trend is set here. The trend is continued here. The trend is continued here. Breaks out. That's the day that we want to buy it. Let's go over OKLO. This is a little bit more tricky of an example, but these can happen on longer time frames. OKLO is a little bit harder to spot. I'm not sure if I should really be showing you this example so far. But, big move up, right? This is growing over like 3-4 months, right? Whole time it's going up. You can see a little breakout setup right there. You can see a little bit of a setup there, right? It's kind of building higher lows, a little bit of action going on there, but really tightens up where? Right here. And we can see majority of these candles are all following along this area, right? See how it goes up, pulls back, goes up, pulls back, goes up, pulls back, and then just tightens up a lot here. We get a thin candle. Next day, breaks out. And look at I made so much money on this. It's actually insane. Look at the move it made. See that tiny little piece of risk, and then boom, all that reward. You make a lot of money off that. BBAI, another really good example. Really good ping pong action here. See these higher lows this whole time, right? It was trickling up. This thing grew about 55% in 3.5 months, and then it pulls back here. You can see it tighten up a little bit here, and then it breaks out on this day. You wouldn't catch that one because it's not strong enough. The moving averages aren't in order or anything. Then it goes up here, and look at that. It pulls back right here, holds the moving average, and then breaks out on this day. So as soon as it's breaking that previous day high, that's when you can grab it. Low of day, pretty wide stop, not a very successful trade. But again, it is a breakout. The volume dropped off. Look at that. You can see, the volume dropped off here, and then it broke out on very big volume. But this is just the start of it. This thing kept growing. Made another big move, and then pulled back a little bit less, went up a little less, pulled back a little less. And then we have a thin day right here, so it kind of tightened up along here. These are a little harder to spot, right? You can see it's like a little tricky. You need to have a little bit of an eye for it, so you got to practice. And I'll show you guys a lot of examples. Then it breaks out here, goes up, and overall, whole time, what is it doing? Building higher lows and lower highs here. So we see over all of this within, there's a lot of breakouts kind of within this thing, or there's a couple, not a lot, but overall, it's creating higher lows and lower highs. In the bigger picture, look at that. Volume is slowly but surely dropping off. I don't even make the volume that big. Volume slowly but surely dropping off, right? And the next day, it opens up above this range. So it's very obviously breaking out, and we get a very high volume day on that day. This is the day that we enter it. Let's check that out. And you sell it when it closes under the 10-day simple moving average, which is right there, and just keeps going down. Let me see if I have, so you catch a little piece of it. Let me see if I have any other examples for you fellas. I should have a bit. NNE is a good example. It's also on my website. If you guys want like a written version of this, I have it on my website. It's pretty good. NNE was a picture freaking perfect. So nice. Look at this one. IPOs here. Stock comes out on this day. Then it pulls back, tightens up, creates higher lows. Boom, breaks out here. You're not going to buy that because it's too close to IPO. There was no initial trend, right? Nothing there. But it then makes a 170% move up in about a week, pulls back to the 10 here, goes up a little less, goes down a little less, goes up a little less, goes down a little less. Whole time creates these higher lows, right? You can mess with that line however you want to. And then higher lows and lower highs, tightens up, thin day right before breakout. Check out this volume drop off. Beauty, picture perfect. Volume's just trickling down, breaks out on this day. High volume breakout day here. As soon as it's breaking that previous day high and or breaking out of the range, you buy it. Stop loss goes at low of day. Tiny little bit of risk there. Let's check out the outcome of this one. Ooh, that thing went flying. And what did it do? As it's still, look at this. Again, right? Tiny little risk. Tiny little risk. So much reward. Thing went up 400% in 11 days. And then it pulls back here, goes up a little less, pulls back a little less, right? And it's building another range. So this is a great example of why you don't want to buy these things too early, because look at the volume. It's a little weird on this one. Like this one, yeah, it's dropping off, but it's a little funky. We're like, all right, we'll see. And the next day, it just kind of loses the range a little, and then it closes under the 10. So this is the day that you would get out of the trade. And then it just falls off from there. So you don't buy them early. You got to wait for that volume confirmation. Or not that volume confirmation, but that breakout confirmation, right? Like if I were to just buy this here, like, oh, I'm predicting it. It looks great. It's going to break out. It's trending very well. It pulls back here, breaks out, pulls back here, breaks out, pulls back here. What's it going to do? Break out again? I mean, you'd assume so. Apparently freaking not. What else do I have? Let me see if I have. QBT. QBT was a good example right here. Another super strong stock on this day. So a big move up here, it pulls back, right? This stock the whole time is growing. Big move up, pulls back. A little thin day right there, breaks out here. A lot harder setup to spot, so I'm not going to look at that. Pulls back here, right? Very similar to DXYZ. Super big move in a couple days. Pulls back here very sharp right to the 10. But then it just goes higher, so there's nothing you could have done. Could you have bought it this day? Debatable. I mean, what kind of genie are you, right? That's just not a good setup. You want a multiple day consolidation. Here we have a multiple day consolidation. We have a pretty good one here. Higher lows, lower highs, tightens up. You can see these moving averages all in order. You can see this volume dropping off, and you see that volume on breakout day. High volume breakout. So right here, not the prettiest range, but it's totally ranging. It's totally pulling back to the moving averages, right? So you have a very strong stock. It's up 1,300% in a month. Then it pulls back, it builds a range, something like that, right? And then breaks out here. Boom. As soon as it's breaking that previous day high, that's when you buy it, or it's breaking out of the range. Very early entry on this, tiny little bit of risk, a lot of reward. Starts to range again here. Would you look at that, right? Big move up, pulls back, starts to range. It's building higher lows, building lower highs, and then it just closes under the 10, and it loses momentum from there. So it never actually wanted to. It looked like it wanted to. It attempted a couple times. I actually tried to buy it a couple times here, and I got stopped out. But there's nothing wrong with this, right? You'll lose some, you'll win some. You just got to catch the good ones. When you catch them here, you make a bunch of money, and that's that. How many minutes are we on this so far? 22 minutes. So let's go over what to look for in good breakouts and how to avoid bad ones. So good breakouts. Let's look at SLV, for example. Or we're going to look at AGQ. No. We'll look at SLV because the ADR is high enough now. So this has all sorts of setups in it. It's really cool to look at. So SLV, right? What we see here is a strong trend, right? So it goes up a little bit, pulls back, creating higher lows the whole time. Then goes up a little, pulls back, goes up a little, pulls back, goes up a little. The whole time, right, it's up about 80% in 6 months. Then it pulls back pretty sharp here. Overall, creates higher lows and builds a little range along here. So if we take a look at this on the hourly, here's a way that we can use the hourly. And you can really see what's going on. I mean, look at the range it's building here. This is within a very tight consolidation period. at this point, right? And then it breaks out on this day. So this is the day that you want to buy it. Stop loss goes at low of day. And then you trail this with the 10-day simple moving average. What do you know here? Another breakout. So we can look at that on the hourly. Take a look at that on the hourly. Another big move up. It pulls back. It builds this range. The volume drops off, and then it breaks out on high volume again. So we can see this on multiple different time frames. I don't recommend that you sit there and like stare at the hourly. Like always look at the daily. You can see there's a little bit of a setup here. This is about as short of a consolidation period that I would want. This is like a week or so. Usually I like when the moving averages catch up a little bit, but when it just freshly breaks out, it has a lot of momentum to it, so it's okay here. The good ones are the ones that take a little bit of time and pull back, and I'm going to show you some real-time examples too. But basically, you buy it here, and again, you're trailing this with the 10-day simple moving average. So you don't sell it until it closes under the 10. It doesn't close under the 10. It gets really close there, but then it pulls back here again. So a good-looking stock will act accordingly. So you'll get very good ranges out of a good stock. So how to avoid bad stocks? Well, look for good ranges. I mean, you got to have a lot of practice in what it is that a good range looks like. I mean, we can see there's a range here. We can see this on the hourly. Is it the prettiest? Absolutely not. It's not the tightest range. It's not the prettiest. This one was much better. This one was much better as well. But there's a range here, and you got to notice that. And then it breaks out, and you're still in this thing. I mean, it hasn't closed under the 10 at all until this day, which was very dramatic. But it's actually a way to short this here, which I'm going to show you. Remember the mean reversion stuff I was talking about when these things go whoop, way up there? Boom, they snap back. So there's a way to actually short that, and we did short that. But yeah, so good stocks. BBAI is a great example of a really good stock, right? Very beautiful range back here. It's acting accordingly. A lot of the examples that I've showed you are in a very good stock. So you guys that are in my Discord, you send me all sorts of stocks in the morning, before the market opens, or even just throughout the day. And I tell you guys, look, this doesn't look good for this reason, and I break it down. It's a lot easier when you're in there every single day, and I'm telling you exactly, how many stocks, or exactly what stocks look good and which stocks look bad and why, right? So I'm going to show you, though, as much as I can in a video. Obviously, it's a little harder than you asking me questions in my Discord, but you guys wanted it, so you wanted the freaking videos. But yeah, so good-looking stock will act accordingly. You're not going to find a really ugly range or a stock that isn't building good higher lows and lower highs and volume dropping off. That actually ends up doing super good. Sometimes it happens for sure, but it's not common, right? It's usually more common that you have a very good-looking stock. So AGQ or SLV, had ranged very well multiple times. So this ranged very well back here, ranged very well right here, ranged pretty good here. I would say the way that this is acting looked good. Better picture on the hourly, obviously. And, a stock that looks good is usually going to have a better outcome, and that's usually how you avoid bad stocks is by buying good-looking breakouts. This is a really good-looking textbook, picture-perfect breakout right here. Also, some bad ones, are thinner stocks. So there's a dollar volume minimum. Now, when it comes to looking for stocks, I want at least $30 million volume. So I have that filtered into the scans, which I'll show you guys how to use that in another video. But the scans here, right, is, a $30 million volume minimum. So I make sure that there's at least, a little bit of money, right? And funds and institutions are buying this up. I mean, look at the volume on this day. This is a $4.4 million volume, very close to IPO. There's not someone on Robinhood pressing buttons and buying $20 million of stock. It's just not possible. Is it possible? Sure. It's just not common that that's going to happen. So funds and institutions accumulate stocks. They increase in price, and then they pull back as they, ease off the accumulation. And, some people start taking profits. So buyers and sellers come to an agreement. The stock kind of ping-pongs, and then it pulls back, builds that range. That's the ping-ponging. Buyers and sellers come into an agreement. The volume drops off. There's less activity. And then buyers take over. Then it breaks out. So that's your confirmation. That's when you go for it. Not always, if it's breaking out, does that mean that the stock is going to be 100% success rate? Because I still have a 25% win rate, even buying breakouts with confirmation, right? We can go look at some stocks in real time that I have on my watch list. Now, you can see a lot of the stocks on my watch list, there's no setups, right? They're just kind of trickling higher. Now, a lot of these stocks, they don't really have setups. This one kind of does. You see how this is starting to range, right? Very, very strong stocks headed in a great direction. And here it's starting to pull back in range. It's creating higher lows, volumes, dropping off like crazy. This is a good group of stocks. You guys know basic materials has been doing really good. Gold and silver just went crazy. They're pulling back a lot right now. But overall, this one is not very good looking. But overall, I'm looking for good looking stocks. Look at this thing. It goes up a lot, goes sideways for a little bit, then gaps up here on this day, It pulls back a little bit. It's creating higher lows. All right, we can see on the hourly really what's going on, right? It tightens up a little bit here. It's not the prettiest range by any means, but it is, kind of ranging along the moving average. The volume drops off a little bit, then it kind of picks up on this day. But I'm waiting for a better setup. So this is on my list because it's in such a good, strong momentum period. This thing is very strong, right? I'm looking for the strong stocks, and then I'm waiting for them to pull back. So this one, it's on my watch list because it's in this very strong period. Moving averages look good. Stocks inclining very well. Stocks very strong. Now I wait for the pullback and I wait for a good buy. All right, let's look at some other stuff. There's ASM, which is another one that I've been watching that's been ranging very well. Look at this, Today is 2/10/2026. If you want to check up on this in a couple days, maybe it'll break out, maybe it won't. This would be a live, example of this. We can see a very strong stock. I mean, since 2025, this thing is up 1,200%, about a year and 1.1 years. Recently, in the last 2 months, it's up about 180%. See how it's pulling back here? What's it doing? Creating lower highs and higher lows. So obviously, I would prefer that this stock tightens up a little bit, but we can see it's starting to tighten up towards the top of this range. Now, if tomorrow, or if we get a thin day today, and tomorrow this thing starts breaking that previous day high and the volume's coming in, I'm totally going to go for it. Now, how do I know that the volume's coming in very early in the morning because I'm buying them in the morning? Great question. I'm glad you asked. I'll show you in another video because the next one I'm going to go over how to actually buy these, how to get entries on them, how to know how much money to put into them, everything like that. So we're going to go over that in the next video, the risk management and everything, position sizing, risk management, how to buy them. And then we'll go over, what's it called? Like profit taking and exits. And then I'll teach you a little more in depth of how to find these stocks. I got some good stuff. Wow, I got a lot of stuff to film. What if I get sleepy, man? Anyways, so yeah, you can see super good, right? Higher lows, lower highs starting to range. And we see that this candle's thin right here towards the top of the range. Moving averages are spread very nicely. They're all in order. Volume's dropping off. Yeah, that's a good looking stock. Light was a very challenging one back here. I actually did buy it here. Very hard range to spot. Some people might not even think that's a range. And the volume was funky, right? So sometimes I'll buy stuff like this. This is like the more advanced. You really got to know what you're doing on this. But we can see again, a strong stock goes up. What does it do here? It pulls back a little bit. Look at that day. It's breaking through on that day. It's creating higher lows here. There's a little bit of a breakout there. There's a little bit of a breakout up here. Very hard to spot, but not much. Now I'm just watching it because it's very strong. I want to see if it pulls back, gives me a good setup. Same with this. It's very strong. The way this is acting, is another thing about like avoiding strong stocks or avoiding bad breakouts versus taking good breakouts is like, this is a very strong stock. It's headed in the right direction. But I mean, look at the way that this stock acts. It doesn't really pull back all that well. There's a little bit of a pullback here when it's below the 200 and then it breaks out, but it just kind of trickles up after that. Like, this doesn't, really curl the way that I'd want it to. We take a look at Sound. This is a stock that I always use a great example of. I mean, look at the momentum of this thing, like the way that it's just curving straight up, right? So in the beginning, well, actually, let me show you something even crazier, right? You might not even notice, but this entire time, I'm going to show you a bunch of setups on this. Higher lows and lower highs. The whole time, look at this giant range. This thing's ping-ponging for like a freaking year. This is 8 months, right? It's ping-ponging. Back here, what happens? The stock, goes up a little bit, and then it gaps up here, creates higher lows, has kind of that flat top that I was talking about earlier. We can ignore the wicks and stuff. It's just where majority of the candles are touching. And then, breaks out the next day. As soon as it's breaking that previous day high, boom. Look at that. As it's going sideways, building this range, volume drops off, breaks out on this day, very high volume. Hopefully you guys are getting this. Like I said, if you have any questions about anything in this series or any of the videos, just leave them in the comments. But yeah, it's the same thing, right? And then we have this giant freaking flag that ends up. So we have this flag back here, it ranges, builds this breakout. Then we get these higher lows this entire time, and then it breaks out of here. Oh, that's a rectangle. But it breaks out of here. And as it breaks out of here, what happens? It goes up a little bit, goes up like 20%, pulls back, goes straight up. It's like, whoa, this is gaining more and more momentum. What does it do? Pulls back, breaks out here a little bit, very hard one to catch, goes up even more. You're like, whoa, this is gaining a lot of momentum. So the next time this comes around, and it sets up like this, and the volume kind of drops off, a little bit uglier, a little bit choppier, but it breaks out here, it's breaking that previous day high. I'm going to buy it here and put my stop at low a day. Boom, it makes another even bigger move up. You're like, holy shit, is this thing ever going to stop? Right, another one here, a thin candle right there. The volume kind of drops off. There's tiny little setups on the hourly. I don't think I can go back that far. Damn it. But there's tiny little setups on the hourly. Basically, the main ones is like, here it's really breaking out. It makes a big move up, pulls back, volume drops off. You buy it here. It's gaining tons of momentum. So a stock that's gaining momentum will act in a way like this. Like it'll go up a little bit, it'll pull back a little bit. It'll go up even more, it'll pull back a little bit. It'll go up even more. Like, it'll just be more and more each time. It'll keep going up, keep going up, keep going up. You can see here, pulls back again, volume drops off, and it breaks out here. There's so many times you could have traded this. Moving averages are getting pretty vertical here, so it's a little sketchy, but when they're in this phase, right, when the moving averages are somewhere along like this angle, they're really good. When they're along like this angle, like kind of here, like, that's a little steep, right? That's a little sketchy. But when they're along this angle, like right here, that's a lot better. So 45-degree angle is pretty good, but you can catch them over here. RGTI is another good example. This broke out a couple times. It coiled up like crazy. Look at this, higher lows the entire time. 6 months, it's up like 130%. It pulls back, tightens up a lot. It broke out on the same day OKLO broke out, which was the example I showed you before. A little hard to spot, but you see all these thin candles right there. The thing just really tightened up. It's been putting in higher lows for who knows how long. This is just such a good higher lows the entire time, and then just tightens up a bunch right there. Breaks out on this day, and then moving averages are a little bit extended. They're like a little bit vertical, but it pulls back again and breaks out here. We see that volume drop off, very high volume on here, and buy it as soon as it's breaking that previous day high and or breaking out of this range. But some pretty good stuff. And to get a better picture of it, you look at the hourly and you can see like, oh yeah, look at that thing. It's gapping up out of that range. It's getting a decently high volume off the open. Everything looks pretty good. Open itself, now that I said open, this is another great setup, which actually made lower lows in the beginning. Made lower lows for a second. So I made a giant move up, 880%, 890%, pulls back, and then it didn't really start like ping-ponging, right? It just kind of trickled down and made lower lows, but then it curled back up and tightened up here. These two candles really tightened up, which is kind of what I'm seeing with ASM, so I'll show you that again. I'll show you the ASM example again, but then we use the hourly on this example to really get a good magnifying glass picture. So let's take a look at this day. This day started here. So the day started here, a little bit below these days, then you wait. As soon as it's breaking that previous day high, right there, you can buy it, right? It's breaking that previous day high right there. You buy it, stop loss goes at low of day. But look at that, not the best in terms of higher lows because this kind of made lower lows for a little bit, but then it turned around and tightened up towards the top of this range. So we can kind of ignore that line there on the bottom and just pay more attention to here. And then it breaks out there, again, as this thing was going sideways, volume's dropping off, breaks out here, really, really good breakout here. And then let's check out on the hourly too. What happens right away, right after this thing, makes a pretty good move, about 100% move in a couple days. What happens? It digests that move, it pulls back, and it tightens up again and breaks out again. The volume kind of dropped off. It's a little bit harder to see. You can see it on the daily a little bit. See that volume drops off again a little bit, and then it breaks out here on the hourly. Crazy volume on this candle. Look at the volume, right, on that candle. It's just insane. But yeah, this is like, if I just saw this setup alone on the daily, like just this right here, I wouldn't take that. This is a much better consolidation period, about, like I said, a couple weeks is usually the sweet spot, maybe a week to longer. Sometimes it can be longer. Let's see, is there anything else? These are different. I'm going to go over these trades in a little bit. ALM, this is another setup I just recently took. Pretty big move up, about 120% move in 2 months. And look at this on the hourly. You can really tell on the hourly how much this pulled back and tightened up, right? Higher lows, lower highs, breaks out here. We can see really clean breakout so far. So, I'm making some good money on this. It's not bad. Is there anything else that I could go over? I think we can do more examples in the future, like when I make more videos on it. And I really just want to get the basic concept of it. So, like I said, you guys, it's a big move up. The stock pulls back a little bit, goes up a little less, pulls back a little less, and just kind of ping-pongs until it just tightens up to where it really can't anymore, creating higher lows and lower highs. And then as soon as that thing starts breaking out, you want to buy it right there, and the stop loss goes at low of day. Now I'm going to show you in the next video entries and stop losses and risk management, knowing how much money to put into it, how to manage your positions and all that stuff. But yeah, I mean, I think for the most part, that is about it for going over this. If I have more examples, like I said, I can always make more videos on it. And if you want me to, just let me know. Be like, hey, I want you to review more breakout setups. I have a video on my channel that's like reviewing breakout setups for 46 minutes. Pretty solid. How long was this? Fucking 46 minutes in itself. But yeah, next one we will do the entry and position sizing, and I'll show you how to actually buy into these stocks and things like that, and how to know all that stuff. And then after that, we can do the profit taking and the exits, and then we can do scanning and watch list. So how to find the stocks and how to build the watch list. Now that you know how to actually approach it, now you got to go out there and find them. You go catch some fish or whatever they call it. And then we'll go over the 2 other setups as well. All right, peace out. All right, so I think that I left off, I'm uploading the other video right now, but I think that I left off with, now we're going to do entry and position sizing. So entry, risk management, and position sizing. So I'm going to start with Wolf, because this is a recent one that I bought. Now, this is not the best example because this setup is a little bit different. This is a setup that you kind of haven't learned yet. It's a little bit of a variation to the breakout, but overall, I mean, it's kind of a breakout, right? It makes a big move up. It pulls back. It's up 600% in a handful of months. Then it pulls back. It creates higher lows, lower highs. Didn't really tighten up that much. The volume's a little funky towards the end, so it's not ideal. This is a little bit different from another setup, which I'm going to show you. But it is kind of like a breakout. It's a variation. So the entry is the exact same. Now, when it comes to actually entering the stock, this is where it gets a little bit difficult. So you can start with either the 5-minute chart or the 1 minute. The 1 minute's going to be a lot more fast-paced. It's going to give you a better entry, but it is going to be a lot more fast-paced, and it's very, very quick. So we can see here, my entries are always in the morning. My entries are very, very early in the morning. I don't like taking entries when it's past 30, 45 minutes into the market open. It does happen, but it's rare that I would be in favor of that, or it's rare that I'd actually be excited to take that. So I'm going to move my camera up here. But basically, on this day, right? So this is the day, it's breaking out. It's gapping up out of the range. It's completely breaking out here. This is the day that I want to enter it. So on the right here, we have the 1 minute chart. Now, let's say we have the first 1 minute candle. This is all we have is that first 1 minute candle of the day. Now, how do we know if this is going to be a high volume day? Well, we zoom out a little bit, and we can see, not only is this breaking out of this here, but also out of this big range. So it did tighten up a little bit on a lower time frame. It did consolidate a little bit towards the end and towards the top of that range, and then completely fly clear this day. So it's breaking out. Not always is it going to be gapping up and breaking out this clean, but in this case it is. So I'm going to show you what to do in this scenario, and I'll show you what to do in another scenario as well. But in this scenario, you can see the first 1 minute opening range candle. Now, if we zoom out a little bit, all we have is that one volume bar. Now we compare this to the previous few days. So here's this day, and then this day. We can see that volume right away. That little tiny thing down here is clearly higher than all these other ones. Now, the second one is, pretty freaking close to it. It's also higher than all these other ones. So we don't know if it's going to be a high volume day. We don't know if it's going to be very successful of a trade, but we have a pretty good idea just based on the fact that that first 1 minute and even the second 1 minute candle is a very high volume candle. So it's higher, significantly higher than these other candles. So it's quite obviously going to be a high volume day. Now, we don't know for sure, again, but that's how I, judge it. Now, let's say this is our entry day, right? So the stock's breaking out right here. We have that first 1 minute candle. So what we're going to do is we're going to wait for this first 1 minute candle to form. So we always enter, 9:32 or later. So that first 1 minute candle, this is 9:30, then it becomes 9:31. We wait for that first 1 minute candle to form. As soon as that forms, we have the high and the low of this candle. So this is now the low of the day, which is the low of this candle. The high of the day is now here, but it's also the high of the first 1 minute opening range candle. So as soon as that high is taken out, that's when we buy it. Now, you're not going to get filled the second it breaks this wick, but, I wait and I see that, boom, it's taking out that high. I buy it, stop goes at low of day. So buy it as soon as it's taking out that 1 minute opening range high, stop goes at low of day. Now, the 1 minute opening range high can only be used if the stock is already breaking out. So if the stock is still within the range, We don't know if it's breakout day yet because it's not breaking out of the range yet. So we can't use that 1 minute opening range candle. We could use this on examples like BBAI back here when this was, also gapping up out of its range. For example, here, this stock was opening above the range. So we can use that first 1 minute opening range high candle. We cannot use that on every setup. Now I'm going to show you an example really quick. DXYZ is a pretty good example. It's an example that I previously used. This stock was not opening above this previous day high. So it has to at least be taking out the previous day high and breaking out of the range, because it could be taking out previous day high, but not even breaking out. I mean, in this case, it was very obvious it was breaking out because it had tightened up so much and the volume was so dead and the candles were so thin. But this day, for example, I actually got stopped out on this day. This day, it pulled back, created higher lows, it tightened up. We had a thin day right there. I mean, this volume dropped off a lot. This volume was like completely non-existent. And then I thought that this day it was breaking out. So it opened up here. I used the 1 minute opening range high candle. It went up a little bit, went up about 4% before it turned around and then took out the low of the day and then stopped me out. So I lost on that. And then, I avoided, obviously it didn't go all the way down to there. I lost as soon as it hit that 1 minute low, or that low of day, sorry. And then here, it has another thin day, and the next day, it breaks out. So as long as it's breaking that previous day high, in this case, and breaking the 1 minute opening range high, it's all good. So let's go back to Wolf. I'm going to show you a little bit more about this. So some position sizing and some calculations. Now, again, if you're not using my program, or not my program, but my layout on TC2000, the formula to calculate risk or position size is going to be, let me create a text, is going to be risk divided by entry minus stop. So essentially what this formula down here is doing, so I right click edit, this is doing the exact same thing. So now we have our risk here, which is $1,000 if you're on $100,000, divided by entry minus stop. So we don't know what your entry price is. So it's just the current price of the stock. Now when you're looking at it right here, like, all right, your current price, the current price of the stock is right here. So it's going to tell you in this calculator in the bottom left, all right, buy X amount of shares. It's not showing you the right thing because the current price is up here and the low day is down here. But in this example, it would do this formula for you. So risk divided by entry minus stop. So you would basically plug in your risk, your entry, and your stop loss. Now in this case, your stop loss is low of day. It's always low of day, which is 14.93. Your entry is wherever you're entering it. So as soon as it's breaking that 1 minute opening range high, in this case, because it's gapping up out of the range, it's safe to go. So your entry is maybe 1536. You plug 1536 into here. So it would be like 14.93 and 15.36. I think that was 1493, right? Yeah, 1493, and let's say 1536 is where you're entering it. So a little bit after that 1 minute high is taken out, it might take you a second. Then you do the parentheses first. So you do 1493 minus 15.36, which equals 14.93 minus. See how slow this shit is? This is why this program's awesome. So that's, I'm so dumb. Your entry, I was like, why is that negative? 15.36 is here, and then 1493 is here. Wow, epic fail. So 15.36 minus 14.93 equals 0.43. That sounds a lot better. So now we have 0.43, and then we have our risk. So risk, let's say it's 1,000. Then we're going to do 1,000 divided by 0.43, which then equals 2325. So in this case, you'd be buying 2,325 shares, which would be 2,325 times, what, 15.36. That'd be $35,712. So you get 35% of your account into the position. So if you have 35K in the position, you have a $100,000 account, you have about 35,000 or 35% of your account into the position while only risking 1%. So you can see you can get a really good risk multiple if you know how long to hold this. Now look at how tight our stop loss is. See that tiny little risk? See where this is adding up? It's like right here, right around here. And all of this is our reward. It's been 2 days in this trade, and I've been freaking crushing it. I've been doing really good with this, right? Sometimes you get these early entries. Sometimes, you want to wait for the 5 minute. If you're a little bit slower paced, you're new to this, you might want to take it a little slower. It's the same thing on the 5 minute. Wait for that first 5 minute candle to form, and as soon as it takes out that high, that's when you buy it. Stop loss goes at low of day. The only thing this does is create a wider difference. which isn't the end of the world. I mean, if we look at where is it? If we look at this, for example, like, I mean, your stops here, right, versus 1, 2, 3, 4, 5, your stops here. So it's not that far off. Like, it's really not that bad in this scenario, but sometimes it can be, a little bit longer than before. So, for example, this would be like a 2% stop, and this could be like about, I don't know, 4% stop. So it doesn't make a difference because this is, almost like double, but it's a little bit harder to get those 1-minute entries. But that's basically how you do it. You calculate your position size like that. Now, when it comes to a stock that isn't breaking out, yet, like it's not opening up out of the range, you got to wait for it to at least be breaking out of the range or be breaking previous day high. Let's see if I have an example. So here's an example. This could be, we could wait for this to break previous day high. So ALM, which, that doesn't really work. But ALM, let's say you were using this wick, right? Because this is a wick. I mean, majority of the candles are here. So technically, this one on the hourly was gapping up out of that range. So we don't have to wait for that previous day high. See the previous day high on this chart on the 1 day? Looks like it's way up here, but we don't have to because look at the range on the hourly, right? This wick we can ignore because we wouldn't pay attention to that wick on the daily chart if the candle wick was way back here, but we can see this is breaking that previous candle high on the hourly and it's gapping up there. So we can just go 1-minute highs on that one as well. But if we were to be waiting, it would probably break the 1-minute opening range highs, I'm assuming, within, a 5-6% move. And then as soon as it breaks the high of this previous day high, that's when you'd buy it and stop would go at low of day. So as long as it's broken the 1-minute opening range highs and it's breaking previous day high, you're good. In this case, sorry, that's not the best example. I don't really have any like active positions that I could show that to you on. What did I just fail on? I just failed on INTC. I just lost money on this one. So this one, I started buying it here because it was looking pretty good. Now, let's take a look at that. So INTC, the day that I bought it was here. INTC, here's a great example of me losing on a trade and getting stopped out. But also, waiting for that previous day high to be taken out. So the day here is the day that I was buying it. So it made a pretty decent move up. The stock has a lot of momentum to it. It's up about 160% in 6 months. Big move up, goes sideways, right? We can kind of range from there. Not sure I'd put the bottom line, but it is creating higher lows overall. The volume kind of drops off, nothing too crazy, but it's building a little bit of a range, right? And then it breaks out here. So I'm waiting for it to be breaking this previous day high. Now, luckily in this case, it would be, breaking out as well if it's breaking the previous day high. Sometimes, the candle's right here, like the high of it. You don't want to buy it there if majority of the candles are here. Like the range is still being built. So in this case, I would wait. It broke 1-minute opening range highs. It broke 5-minute opening range highs. See, we're on the 5-minute chart now. You can see that 5-minute candle was broken way over here. I'm not going to buy it there because it's not breaking out yet. So I wait. It breaks this previous day high, which is like right around there. And then I buy it as soon as it's breaking that previous day high and breaking out. We can see the volume was pretty good coming in off the open. Everything looks solid. I bought it, and then it was a little bit later in the day, not too long. This is about literally 15 minutes in, but, I waited a little bit, and then it pulled back and ended up taking out the low of the day. So in this case, I bought it here as soon as it was breaking out and breaking the previous day high. Stop loss at low of day, so about a 5.3% difference. So if I put 100% of my account in that, I'd be losing about 5%. So I'd put about 20% of my account in that to be losing 1%. So 1% risk on that trade. I didn't actually risk 1%. I think I risked like a half or a quarter. But and then the low of the day's here, and then it stops me out right there. So my order gets filled. I lose money on this trade, is what it is. I wait for the stock to continue to range. I'm like, all right, look at it now. I mean, it's still building a range, kind of. It's a little bit uglier, but it is still ranging. It's still going sideways. The volume is still kind of dropping off. So maybe in the future, this will be a stock that I buy. But in that case, it's not gapping up out of the range, so I got to wait for it to at least be breaking out. And it's already broken the 1-minute and 5-minute opening range highs, so everything's good there. Now, very simply, right, if I were to be buying this stock today, I did buy this stock today, but I bought this off 1-minute opening range highs. We can see, 1-minute opening range highs, pretty solid there. So in this case, I would be buying it. I wait for that first 1-minute candle. As soon as it breaks this 1-minute opening range high, I buy it. Stop loss goes at the low of the day. So sometimes it takes a couple minutes. Sometimes the first candle is green. Sometimes the first candle is red. Doesn't really matter. As long as you have that first 1-minute candle and then it breaks that high, stop loss at low of day. as long as it's gapping up out of the range. If it has not broken out yet, you're not using the 1 minute opening range high. You're just waiting for it to break out. But in this case, it's already breaking out. It's already flying up. Another variation of the breakout setup. I'll get into that in another video. This is a little bit different trade. As you can see, it's not the prettiest breakout, but breaks out here, or breaks the 1 minute opening range high here. Stop at low of day. It's about an 8% wide stop. Now, typically, you want your stop to be less than ADR. So in this case, the average daily range is 9.06%. Our stop loss is 7.8%. That's all right. If it's above ADR, it's like, all right, you're pushing it a little bit. It still can be done, but you are pushing it for sure. The smaller the percentages of the stop loss, the more of your account that you're going to get into it, and therefore, the bigger the potential outcome. So if it's a very high ADR, like a 9% or something, and you get like 30% of your account into it, that's freaking awesome because you got a really good stop. So the tighter your stop loss is compared to the average daily range, the better. But don't be like chasing super quick entries. Like at least wait for those 1 minute highs. At least wait for them to be breaking out. Don't be buying them too early. What was I going to say? Oh, so basically now, like this would be a later entry because the stock is up. Like, I'm already up some money on it. You'll notice TC lags sometimes. Like see how it's frozen? It's when I use this scroll bar on the bottom, like the one on the daily or this one. There we go. But you see where it is now? It's up like 8% from where I bought it. So down to the low of day is about a 14% stop, 14.5. So if I was risking $1,000, this is going to tell me to buy 147 shares, put my stop loss at the low of the day, which is 40.39, and that'll be about $7,000. So on a $100,000 account, I can get 7% of my account into this position while safely risking 1%. So that's not the best. Obviously, I'd want more than 7% of my account in my position. I aim for around anywhere from 10 to like 40%. I don't really have a limit, but the lower the ADR, the tighter the stop is going to be because the less volatile the stock is. Which means the more of your account that you're going to have to put into it. So I found my sweet spots anywhere from the 5 ADR to like 12-ish. It's usually where I get some good trades and some good size, some good volatility out of the stock. But yeah, basically, you don't have to do that calculation every time, right? We just see that this thing, it's breaking out, whatever. You use the risk calculator down here. That's how you use that. So I would see back here, for example, this would calculate it. It'd say buy, probably twice as many shares as I bought now, or as I would be buying now. I didn't buy them right now. But, yeah, so you just use that. Boom. It says buy 147 shares. You go to your broker. So, like, let's say I pull up Webull. I go to my trade tab. I got it on I have a little custom layout on there. And then I would just type in the quantity. Oh, boom. What's this telling me? 147. Do I want to make that 150? Sure. Whatever you want to do. You can do 147 exact. You can do 125. You can do 100. You can mess with it, but keep it easy. Let's just do 147. I click the stop loss box. The stop price is 40.39. I type in 40.39. I change it to GTC, and then it'll tell me estimated P&L is X amount of dollars, so I can see, all right, am I going to lose more than 1% of my account on this trade? No. Okay, buy. Boom, done. And stop loss is set with you. Never set a take profit, but always set a stop loss. So if I did that on the phone, let's pull up was I saying WDC before? I don't know why I think I was. Let's pull up ICHR. Let's go to trade. So I click on the trade button there. So I type in the stock, then I click on the trade button. Now what I would do is I would do buy. So side is buy. Order type is markets. I always do market orders. We can do quantity here. So the amount of shares that I'm buying is going to be 146. It just changed from 147. Trading hours, regular hours. Oh, wait, no, sorry. Oh, I messed up. All right, take that back a couple steps. So order type is actually not market. It is, we scroll down, and it's a group order. It's a market plus take profit / stop loss. So then we turn off the take profit order. So there's a little box. You turn that off. Quantity, type in the quantity. Time in force, it's fine to be day on the top. And then the stop price, you type in your stop loss, which is going to be 40.39. And then we see stop loss order, and that box is checked, or that toggle is toggled, and the take profit is off. And now it says stop loss order, I would lose $986.96. So that's below $1,000. If I have $100,000, I don't want it to exceed $1,000 loss per trade. And then I put the time in force on the bottom, good till canceled. So basically, in the morning, if I was buying this, right, I see it's breaking that 1 minute opening range high. I'm like, all right, boom, I know exactly how many shares to buy. I go to my thing, market plus take profit / stop loss order, type in the quantity real quick. I'm looking at it. Time in force day on that quantity for the buy. That's fine. This is, market plus take profit / stop loss, so it's an advanced order. So then I would go to the take profit, turn that off, stop loss order, make sure that's on. Stop price, I type in 40.39. It's telling me right there. Good till canceled at the bottom, and then we see that estimated P&L is at 998.96. It's below 1,000, so it's below our risk. Perfect, and then boom, buy, and then you would buy it. So we can see this would cost us $6,894. This is saying 6.9K. That's right in line. It's saying we'd lose $1,000 or our risk. Stop loss 40.39. Everything checks out. It's all good. Boom, you buy it. So it does take a little bit. It's got a little couple second delay, but we're talking, maybe a couple bucks here. It's not that big of a deal. As long as it's not flying straight up to the sky, you'll be perfectly fine. But that's basically how you would do that. And, always wait for the stock to be breaking out. When you have examples like BBAI where these things are gapping up out of the range, you just go straight for the 1 minute opening range highs. When you have the DXYZ, for example, it's not breaking out yet. You got to wait a little bit. INTC was one that wasn't breaking out yet, right? It opened up towards the bottom of the range. I had to wait for it to be breaking out of this range and breaking that previous day high. So it's already breaking 1 minute opening range highs. Now we're just waiting for it to break out. So in that case, it doesn't matter if it's breaking 1 minute opening range highs down here. We're not going to buy it down there. It's not breaking out yet. As long as it's breaking out, that's when you buy it. So the 1 minute opening range high entry is really only important when it's already breaking that previous day high, or it's already breaking out within the first 1 minute candle. Then you use that 1 minute opening range high for confirmation. Other than that, just use that previous day high and or that breakout level as a confirmation. So let me think, could I get OKLO is one that I had to wait a little bit. I believe RGTI is another one. So we see it tightens up here. We get a thin candle right there. It opens up here, kind of goes down a little bit throughout the day at some point. We're waiting for it to at least be breaking that previous day high and be breaking out of the range. A little bit more complex one here because it's a little harder to see. RGTI was a little bit easier over here. Over here it wasn't as easy, but over here, we see it's opening up. It's not breaking that previous day high yet though. So we'd want to wait in this case, wait for it to be breaking that previous day high. Maybe within the first 1 minute candle, that 1 minute candle is already breaking that high. Maybe the first 1 minute candle is all the way up here and it's clearing that high. Then as soon as that high of the 1 minute candle is taken out, that's when you buy it. But let's say the first 1 minute candle doesn't really do much. It's not breaking the previous day high. And then the second one, maybe breaks the 1 minute opening range high, but it's still not breaking out yet. You got to wait a little bit. So wait for it to at least be breaking that previous day high and breaking the 1 minute opening range highs, all that stuff. Again, if you have any questions, I just clicked this to month on accident. Again, if you have any questions on any part of any of these videos, just let me know in the comments, and I'm going to go through at the end. Make sure you get these comments in quick because, I'm trying to do this stuff within ideally today, but I'll probably give you guys a little bit for the comments. We'll see. I could always make more on the comments. I can always post more videos on the comments, just helping people out because I'm sure, there'll be a lot of them over time, especially if you guys are sharing this series. I don't know what you plan to do with it, sending it to your buddies and stuff. I don't know. But yeah, that's the basics of the entries and everything like that. The entries and the position sizing. So position sizing is super easy when you have TC2000. It's a little bit more complex when you don't. So I really recommend that you get this program just because it has all that stuff set up. I showed you how to set it up, showed you how to use it. It really couldn't be much easier. It tells you how many shares to buy, where to set your stop loss. Well, I think I need a haircut. Probably. But it shows you, all that stuff. So it's really straightforward. And yeah, I think that's about it. All right. The next one is going to be, I don't know yet, actually. I have some notes written down, but it's not very structured. We'll see. We'll figure it out. I'll get this one uploaded, and then we'll get started on figuring out what the hell the next video is going to be. So that way everything pieces together properly. All right. Peace out. All right, I took a little break. Got myself I've got milk, banana, a lot of peanut butter. It honestly tastes like straight up peanut butter, honey, and protein powder. Not sure if this does anything. Physique does not really check out, but anyways, now that you know how to identify a breakout, What do you know? You know nothing. You're stupid. No. Now that you know how to identify a breakout, how to enter it and how to enter it correctly, risking the proper amount and sizing your position correctly. Now let's go over profit taking, so partial profits and moving stop losses. So originally I had showed you guys, we're going to use SanDisk for this example because it's a stock that I just made so much money on this stock. I bought it back here. Isn't that crazy? I bought it here at 236 and people were like, bro, this thing is already up 500% in the last couple months, right? Well, you're buying this? You know, people thought I was crazy, right? Because I posted about it. 232 went up to 720, so it went up another 200% and tripled again after like quadrupling, 5 timesing. Went up another 200%. So I just made a bunch of money on that. I actually sold it today, which was a little bit early, so it's kind of breaking the rules here. But I'm going to show you a little bit about this, and obviously this series is not going to be how to be a professional at this. It's getting you started, getting you on the right track. Like, you want to become a professional at it, you want to get a lot better at it, you want to know how to time the exits better, you want to know how to get better sizing, you want to know what stocks look better and how to actually pick the right ones. Like, that's what my Discord's for, because I get to show you all of this in real time. So you guys get to watch me trade live, you get to talk to me every single day. You guys have a million questions for me, and I answer every single one right there. It's like how you're watching this video. Like, this is basically what you would watch every single morning, except I'd be doing my process, finding the stocks, showing you what watch lists I'm moving around, what stocks I'm moving around, why I'm buying certain stocks. You can send me whatever ticker you want to look at, and I'll check it out, and I'll tell you why it's good or bad. Review your trades, all that good stuff, right? So there's a bunch of that stuff. So if you're not in my Discord, you absolutely should be. That'll be linked in the description as well. But anyways, let's go over my profit taking and moving stop losses and everything. So in this example, there's a couple places that you could have bought this stock, right? So I'm going to highlight the two. So the main one, big move up, right? There's maybe some examples back here on the way up, but we're looking at this, right? Makes a big move up, very big trend. 3 months makes a 500%-ish move, pulls back, creates higher lows and lower highs. So in this case, I ended up buying the stock right around here. I bought it this day as soon as it was breaking out. It was breaking this previous day high. So I didn't use the 1 minute opening range highs. I bought it as soon as it was breaking this previous day high. Stop loss goes at the low of the day. So about a 4.3% wide stop, give or take, maybe a little bit more, maybe 4.5, maybe 5. But overall, around like that 4.5 mark. So I bought it here, stop loss at low of day. Now you could have also bought it here. Now the reason you could have bought it here, volume dropped off again. The stock kind of pulled back a little bit. It was still kind of within the range a little bit. It was still pretty sideways, and then it pulled back a little bit. Not a very good range here, but we can see on the hourly, it tightened up a lot. These candles are getting really thin around here, and then it breaks out here. So this day you could have used the 1 minute opening range highs. Super, super big volume right off the rip. Let's drag this over so you can see that. So super big volume right off the rip. I mean, look at that first hour, right? Super, super high volume here. If we looked at the 1 minute, it would look very similar, very high volume off the opening range there. So you could use the 1 minute highs in this example. But I bought it here, and I didn't buy more here because I was comfortable with the position that I had here. But let's go to profit taking and, moving your stop losses up. So that initial stop loss, when we buy it on this day, right? We buy it this day, buy it here. As soon as it's breaking out, stop loss goes at the low of the day. Now, in terms of when do you move your stop loss, when you take profits. So if I'm risking $1,000 here, I'm going to take partial profits when the stock is up 5 times my risk. So once that multiple hits 5 times my risk, it didn't do it here. It didn't do it here. My risk is this. So we have a little bit of risk and not too much reward. This is maybe like 1 to 2 times your risk at the peak of up here. It's not good enough. So we keep waiting. And here, this is when, oh shit, this might be 5 times my risk. So if this day, if it starts off like, all right, it's looking good, the stock's continuing up, everything's so far so good, like very successful trade, you wait until the end of the day, and let's say here, I'm up 5 times my risk, for example. I wouldn't be up 5 times my risk here, but let's just say, for example, I wait until the end of the day regardless. So all my buys and stuff are in the morning, and all my sells or trims or adjustments of anything is at the end of the day. So I wait until the end of the day in this scenario, and you can see the reason I wait until the end of the day is because majority of the candles close near their highs at the end of the day. So stocks trend. They do that on a daily time frame. They do that on a weekly time frame, an hourly, a 5 minute, and a 1 minute. So intraday, if the stock is trending up, it's likely that it's going to close near a tie. So I always wait until the end of the day, right? Because we're playing into the exact same concept. Quick little smoothie drink. Anyways, so yeah, I wait until the end of that day. Now, if at the end of this day, let's say it started off, I was at 5 times my risk towards the beginning of the day or even the open, right? I would still wait until the end of the day. Now, if at the end of that day, I'm up 5 times my risk or more. So if I risked $1,000 here and I'm up $5,000 on this trade, I would trim 20% of my position. So in order to do that, because we did that advanced order at first, we would go over to our orders. So we'd have pending orders, right? It would say the stock, your buy, and then your stop loss. So we'd click on that and we just click cancel order. So you can click on either the buy or the stop and you cancel the advanced order. Because this is a group order, this is the buy and the stop loss in one. So these are paired together. You're going to cancel it, which isn't going to cancel the buy because that's already filled. The stop loss isn't filled, so it cancels that. Now you have, let's say, 100 shares. Then you go and you sell 20 shares. So you sell a portion of your position at 5 times your risk. And then your stop loss used to be down here. Now you're going to move it to your break even. So whenever you do that first trim, you move your stop loss to break even. So in that case, if we are buying this stock here at 231.63 and our stop loss is at the low of the day, 221, at the end of this day, we trim 20% of our position. So let's say we had 100 shares, we sell 20 shares, now we have 80. In order to do that, you got to cancel the position, or you got to cancel the order under your orders tab or whatever it is on your broker, because if you try to just sell it, you have a pending order of shares to be sold. So you can't sell more. Like you can't sell more shares than you already have. So you already have a pending order for all your shares, your 100 shares at that stop for that advanced order, that group order. And now you got to cancel that one, and then you go here, sell a portion, move your stop loss. Now that that's canceled, you go to it, and then you go to your position. Let's say, for example, I'd go to a position, click sell to close again, not the take profit stop loss. And the order type is going to be stop order, not an advanced order. This is just a regular single order. And then we type in the stop price. So let's say we bought this here at 232.12, for example. Stop price, I type in 232.12. And then quantity, however many shares. So if I had 100 and I sold 20, then I have 80. So the quantity would be 80. Time in force, good till canceled. Make sure that it's on good till canceled, not day for the time in force. Because if you do it on day, it'll cancel at the end of the day and your stop loss will disappear. And then it might hit your stop and you won't even know. And you'll be like, oh, I probably got stopped out. No, you didn't. You're selling it because you set it today. So make sure to set it to good till canceled. And then moving forward, moving stops up. So that way you've locked in a little portion of your position. You've taken a partial trim. 20% is about, where I draw the line. I probably wouldn't trim more than that. But let's say you trim 20% there. When you sell the entire position, you sell it when it closes under the 10-day simple moving average. So this is kind of where I was breaking the rule a little bit. We can see this day, it gets close to the 10, but it's not close. When it's too close like that, where it's right there on the 10, I don't get rid of it. Here, let me move this over here. I don't get rid of it. I keep it. And in very recent times, so remember in the beginning, I was talking about holding a position out, how it's kind of hard because you're I've been losing. It's very challenging to deal with a low win rate. You're like, oh shit, I've been losing a lot. I should probably lock in the profits here. Everything's looking it's looking good, but the stock's going up. I'll just take a piece of my profit. You always want to trail with the 10-day simple moving average. Look at this thing. When a stock is above the 10, you don't want to get rid of it. As long as it's above the 10, you're good. And remember, these sells are always at the end of the day. So we wait. I have an alarm set on my phone for 3:55, which is 5 minutes before the market closes for me. So at the end of the day, I come and I look at this, and I'm like, oh, shit, this is pretty close to the 10. Yesterday, I sent out in the Discord, what did I put? I put something about SNDK pretty close to the 10, but doesn't look like it wants to close under it. Keeping it for now, no sells or trims. So I wasn't going to get rid of any of it. I wasn't going to sell a portion of it. I wasn't going to sell the whole thing. We had multiple trims, or we had already trimmed, right? We didn't need to trim this again. We didn't need to do anything. But what we can do in a scenario like this is just wait. And if you want to move your stop loss up, because if our stop loss is way back here, the stock would have to go down 60%, right, for it to trigger your stop. So you can move your stop up. I will never move my stop up higher than the 10 simple moving average. So for example, here, I move my stop up maybe to this day's low a couple days after this. And then maybe a couple days after this, I move my stop to this day's low because the 10 is already way up here, right? So I make sure I give myself some room. I make sure that my stop is never above the 10 and never just barely below it. I give myself some room. So you always want to, move your stops up as time goes on, and pick some good spots. Pick some, high volume, like breakout candles. Like this is a high volume candle here. There's a high volume candle there. So like this low is good. As the 10 surpasses it in a day or two, you can move that stop up to that day's low. 10 surpasses this one. Like see how, on this day, the 10's right there. Like it's really close on this day. This could pull back to the 10 and maybe even a little lower and not end up closing under the 10. And if you put your stop to here, you'd be kind of shaken out of the position, and then the thing went way higher. So move your stops up accordingly. If you have more questions on that, obviously it's a lot easier when I'm showing you guys live and I'm showing you the trades live. You guys have been picking up on that pretty good. But, over time, move your stops up a little bit. Give yourself room. Don't do it too quick. When the stock's way up here, like this, for example, it's at 504, you can move your stop down to like here or something. Just pick a spot that makes sense to where it's up a little, so if a catastrophic event were to happen, you wouldn't be completely toast. It wouldn't have to go all the way back down to your entry. But now closing the position when it closes under the 10. So a stock or a daily candle is going to close when the market closes. So we obviously want to wait, right? So I do that alarm 5 minutes before. And if this is really close like this, this was just like pennies away. Like I'm not going to close it because the stock's still in a pretty good spot, right? Like it's still going up a lot. It's pulling back. It's almost starting to range here. It's almost starting to form a little bit of a breakout here. We can see in the hourly, it's starting to range a little bit. It did drop down a little here on this wick. But overall, like this was looking pretty good, before today. Obviously today it's going a little bit lower. But then you can, check it out and be like, all right, it's still trending up. Like there's nothing wrong with this. It's holding the 10 for now. It's still trending up. Volume's dropping off. Maybe this thing wants to break out in the future. But then we wait. And so today, if this stock is closing below the 10 simple moving average, that is when I'd want to sell the entire position. So right now it's 146. I'd have to wait until at least like 355. But let's say at 355, this thing's not going to turn around 7% in 5 minutes. Well, it could, but you get what I'm saying, right? Like it's just not that realistic. So then I would just sell the entire position because it is about to close below the 10. You can wait until the last minute. You can wait until 1 minute before close and then sell your position there. But yeah, you basically just want to wait a little bit. You want to move your stops up on the way. So there's a couple of different examples of that. Sound is another great example. You guys know I love this stock. I've shown you this example a couple times now throughout this series. So let's say we bought this here. It pulls back a little bit, it breaks out. We buy it here. Stop loss goes at low of day. Calculate our risk, everything. You guys can use this little thing below me down here, this thing right here. Or you can just wait and you can just wait and see. But you buy it here. Stop goes at low of day. I don't know what I was saying, wait and see. You can just calculate it or something. I don't know where I was going with that. But you can just buy it here. Stop loss goes at low of day. And you have your little risk. As it moves up, you take partial profits. At the end of the day, as long as you're up 5 times your risk. So whatever day, you're like, oh shit, I'm at five times my risk here. Wait until the end of the day. A couple minutes before it closes, you would sell a portion of your position, about 20%. Move your stop loss from low of day to break even, and then you continue to trail this with the 10-day simple moving average, raising your stops up as this goes on. Look, we got a high volume right there, as this 10 surpasses that low, maybe you can put it there, or maybe you can put it here, or maybe you can put it here, right? There's all different spots, as long as the 10 is surpassing it, you can choose a spot. It's not that serious, right? As long as your stop is raised up over time, you do all that stuff, you go in, you modify the order, you cancel the order, whatever you got to do. And then you raise your stop up, do all that good stuff. And then you just keep holding this until it closes under the 10. So we can see eventually this day, at the end of the day, a couple minutes before close, it's closing under the 10-day simple moving average, this like purplish pink line right there. That's when we sell the entire thing. So our buys back here, we trim a little bit into it, and then we trail it with the 10, and it goes there. So obviously, you can get a lot more complex with this. You can buy more this day. You can buy more this day. You can buy more this day. There's a bunch of different ways that you can approach these to really extract the most out of it. Like I said, that's not really something I'm going to cover in like a little YouTube series because it's a lot more complex. That's something that I cover when I'm talking to you guys in the Discord and stuff. But that's the basics of it. So your buys are the regular breakout. Your exit is a partial exit in the beginning where you trim a portion of your position and then you move your stop loss to break even. That way you've locked in profits. It really helps with the fear factor of it. Really helps with the anxiety of holding a trade out. And then you trail the rest with the 10-day simple moving average, and you can see it closes under the 10. So if we look at these breakouts, right, pulls back, breaks out, goes all the way until it closes under the 10 here. What happens when a stock closes under the 10? Typically loses momentum, and we can see in this case, it lost a lot of momentum. It did nothing for like 4 months. Let's take a look at DXYZ, another trade that I showed you. We can see, you buy this thing right here as soon as it's breaking out, stop at low of day. A couple days in, you wait until the end of the day. You might be at 5 times your risk on the open of this one, but wait till the end of the day. Boom, really strong close. That's literally the high of the day was the close. Sell a portion of your position, 20%. Move your stop loss from low of day to break even. Continue to trail with a 10-day simple moving average. You get this big, heavy pullback day, but guess what? You don't panic because the stock is still above the 10-day simple moving average. As long as it is not closing below the 10, you are good. This day closes below the 10, so a couple minutes before the market's about to close, it's closing below that purple line right there. That's when you would sell the entire position. What happens to the stock afterwards? They typically tend to, lose a bit of momentum, and that it absolutely did. Open, another great example. So we can see this day, it makes this big move up, pulls back, tightens up a lot here. We did get lower lows, but it did curl back up, tighten up towards the top of the range, and then break out. As soon as it's breaking that previous day high, we can buy it there, stop at low of day. A couple days in, you're up 5 times your risk, maybe around like here or something. Wait until the end of that day, sell 20% of the position, move your stop loss from low of day to break even. You can continue to move your stop up on the way up and then trail the rest with the 10-day simple moving average. So you have that first sell, and then the rest, you wait until it closes under the 10. So a couple minutes before the end of the day, you have your alarm, you check on your positions, and then you sell the entire thing here when it closes under the 10. And yeah, that's pretty much it. And you can see a lot of these stocks lose momentum after that. It's a very important thing. It's a really, really good tool. It's a really good way to know how to get in these stocks, how to, put the right amount into each stock. It's a really good way to figure out exactly when to sell it. We have that little partial profits. That way you can size off a little of a position, take a little bit of profits in case it does turn around short term or something. It helps smoothen the equity curve a little bit. You can mess with this all sorts of different ways. This is something that, we've been working on in terms of messing with when to trim, when to sell the whole thing. I found the 10 is really the best. I really haven't found much better than that, but we're working on some trims and things, seeing if we can improve the strategy. All of us in the Discord, you guys have been doing some pretty sick work. I'm excited to see what we can get out of that. I'd love to improve this. I've got some great performance over the past years, but it's always better. I would say when it comes to making high percentages, I'm interested. I'm real interested. So we'll see what we can get out of it. But yeah, that is pretty much all I got in terms of, let's see, I have some notes, so let's see if I wrote down anything else. Canceling stops before trim, replacing the stops, moving the stops up, full exit at 10 estimated close, and having the alarm set. No, that's about it. Pretty straightforward process, right? Like I said, if you guys have any questions about anything, any of these series, or any of the episodes, whatever the hell I'm titling them, I don't even know. If you have anything at all that you want to ask, just let me know in the comments. And again, I'll be making that whole video going over this stuff. Yeah, I think that's about it. But yeah, go check out, if you guys want to go check out, a lot of breakouts and see like what happens after they close under the 10. They usually just go to shit. So the 10 has been a really, really good exit for me and has worked for many, many years. So I don't recommend you change that. Maybe you can mess with trimming and things like that. I think that's definitely something that could be improved. But, the bulk of it is good. You're going to make money. So, or well, if you follow along properly and, you know what you're doing, you can make money from the market. I'm not guaranteeing that you're going to get rich or something. Anyways, I'm out of here. I will see you in the next one. The next one, what am I going to do? I'm going to drink this smoothie and figure it out. All right, later. All right. So, what did we do so far? We are on episode 5. So we did the introduction and TC2000 setup, the breakout, entry and position sizing, risk management, and then profit taking and exits. So now I'm going to teach you guys how to actually find these stocks. So I showed you guys earlier in this series or whatever, whenever we were setting this up here, we have these scans. So the first one is going to be this volume scan. So this volume scan, I look through this throughout the day to kind of just see kind of what's picking up. Maybe I'll catch some breakouts on here. This is a biotech. Oh, another rule is I don't trade biotechs at all. I don't recommend that you do either. But I don't trade biotechs at all. I just completely avoid them because they gap up and down all the time. They're very just sporadic. We can see here this thing gap down 50% overnight. Another gap down of 60% overnight. They're very unstable, and I just wouldn't recommend that you trade them. So I just do not trade any biotechs at all. But yeah, I'll go through and like I'll look at, stocks that are breaking out throughout the day or just stocks that are picking up and gaining momentum. But the main thing that I use to figure out what stocks are gaining momentum and what stocks are picking up is the 1 month gainer, the 3 month gainer, and the 6 month gainer. So basically what these do is these filter out all the stocks by strength. So these are showing you the top 2% of stocks that move faster than 5% per day, have a price history of above $1, so at least $1 minimum, $30 million volume, and then that was just something else I was doing. But yeah, $30 million volume, blah, 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 right? So $30 million volume, same thing. This is just 60 bars. The other one's 20 bars, and then the 6 month is 120. So that's the only thing that's changed. The criteria and everything's the same. It's just the time frame. So what I'll do is I will go through these at the end of the day. So I do this at nighttime, usually after the market's closed. You can do it after the market's closed, after hours is closed even, which I think they're like changing that. I don't even know what they're doing. A lot of people asked if that will affect anything. For me, no, it really won't. This is getting really bright right there. Whatever, this isn't a beauty show, so it doesn't really matter. As long as you can figure out what I'm talking about. So basically, I'll go through the 1 month gainer, I'll go through the 3 month gainer, and the 6 month gainer. And what I'm doing is I'm finding stocks that are in these periods, right? The stocks that are initially gaining momentum, and then I move them to a watch list. So my watch list down here is my focus list. This is where I would move stocks to when they're gaining momentum. So VNet, we can see in the last 9 months, 10 months is up like 156%. I like the way that's acting. It tends to pull back a lot and, kind of give good setups. It did pull back here. It was ranging a bit here, creating some higher lows and lower highs, but it just took off from this day. It didn't tighten up enough for me to really want to buy it. You can see this, it kind of broke out from here, but it didn't tighten up enough for me to really want to buy this. So I passed on this one. So far, it's actually doing pretty good. AOI, here's another one. We can see in the last 3 months, it's up about 160%. It's been growing for a while, since like April. This is up like 400%. So overall, from back here all the way, like mid-2023, this is up about 2,700%. So I'm looking for stocks that are strong. I zoom out a little bit, but also, I'm looking at kind of what's going on here. We can see that this was pulling back and building a bit of a range here, kind of creating some higher lows in a sense from here to here-ish. A little bit, not the best. It didn't build the best range. It didn't tighten up all that good, but it broke out here. Pretty strong breakout, and the next day it came, hit low of day, and you would have been stopped out in that scenario. Then it closed under the 10, so you would have been out of it there as well. And it's just been a struggle to enter this stock. So I'm just waiting for this. I'm stalking the stock, right? I'm waiting for that perfect entry. I'm waiting for this thing to pull back and set up. CIEN, another one. This is up a lot. This is up 500% in the last 10 months. Very strong. Just waiting for it to pull back and give a good entry. Wait for it to build that nice range. TGB is a copper stock. Basic Materials has been doing pretty good. So this thing's up about 390% in the last 10 months. And look at this. It's starting to pull back. And it's creating some higher lows here a little bit, right? And, a lot of the candles are falling within this range. So I look at the hourly, kind of magnifying glass type of thing, and I can see a lot of the candles are there. Look at this. Volume's dropped off a lot. We're potentially getting a thin day here. So basically what I would do in this scenario is if I think this is going to break out tomorrow, I would, create a price alert above this previous day high. So I'd create price alert at 8:33. I'd just click around that previous day high and then right click, create the price alert. And then over here in the alert console is where it would pop up. So TGB, I actually have one already. It's at 8:34. We'll go ahead and use that 8:33. It's a penny lower. But the high of the day is 8:32. So 8:33 is 1 penny above the high of the day. So as soon as it breaks through there, it'll go beep, like super loud. Let me see if I can, whatever, I don't have to show you, but it just makes a really loud beep, and it just lets me know. It pops up on the screen. It'll be like, hey, price alert on TGB. Price has crossed through this area that you set the alert for. So this one is kind of ready, right? It's tightened up a bit. It's been making higher lows. It's been tightening up, and now we're getting a thin day. The volume's dropping off, so this one looks pretty good. I've been looking at this stock for a little bit. It's been slowly but surely grinding higher, and now it's starting to range. So I find these stocks when they're in the periods of, going up, and then I wait for these pullbacks. So the really strong ones get put on the list. Gold is another super strong one. This thing's up about 190% in 3 months. It did pull back a little bit here. Super wide stop on this day, so I didn't end up taking it. I think my stop loss would have been it was 8 or 9% wide. It was just way too wide for me, so I didn't take it. Risk to reward was too bad. It was well above the average daily range. GLW, really strong stock here. Kind of paused for a little bit, went sideways, and now is gaining a lot of momentum. The way that this is pulling back to the moving averages, I like it a lot. So I'm just going to continue watching this stock, basically. This, to me, is a really good looking stock. I like the way that this is acting. You can see on the hourly, it created some higher lows. It kind of tightened up a little bit, right? If I were to throw some lines on it, just to kind of visualize it. The lines don't actually make the stock go up, obviously, but just to kind of visualize it, right? Like that's what we're looking for here. So we're paying attention to this, and I'm waiting for a better pullback. It pulled back a little bit here, and then really picked up this day, but it would have taken out the low of the day there. This setup, it didn't really tighten up. On the hourly it did, so in theory I could have bought it this day, pretty early in the day. It was breaking out of this little range here type of thing, but it just wasn't long enough consolidation. I didn't think it was ready yet, but it is taking off. It's doing pretty good. So now I'm just waiting for a better pullback on that. TER, another super, super strong stock, but it's very linear. It's just going straight up. It's not really like that momentum look. Like this has more of that momentum look where, the moves become exponentially bigger each time. So we had, a big move here and it went sideways, and now it looks like it's moving a lot faster, right? It's picking up the pace. I like when they pick up the pace. I like when they start going faster because that means there's a lot of momentum and there's a lot of, flow to it. So that's pretty much what I'm looking for. Here's another good one. ASM has been strong for quite some time, like early 24. It's up about 2,300% in 2 years. Recently, in the last couple months, it's up about 156%. We can see it's starting to build a good range here. I've been watching this here, like, very early on. I've been watching this even like back here, for example. I could have been watching this, but I was really watching it like these couple of days. And we see it's starting to pull back and it's starting to range really nice. So I'm just waiting for that perfect day. Now, because it's starting to tighten up towards the top of this range, I'll create a price alert at this previous day's high right here on this previous day's high, which I have one. ASM I have at 1096, so it's a little bit high. That's actually this day's high. I haven't marked one out for this day's yet. So, for example, I'll just close that create a new one here at that previous day high. So I'll stop the price alert on that previous day high. Why is that like confusing me? I'll stop it for this day's high, and I'll create a new one for this day's high because now it's another thin day. I would like some more range out of this. I'd like for this to kind of drop down a little bit more and create another higher low and then tighten up a little bit more. But if it goes from here, I wouldn't mind taking it. I mean, the volume's dropping off. But, the main thing is when I'm scanning for stocks, I'm looking from in this period. I'm not looking for the perfect setup that's already ready, right? Like a lot of people go into the scans and they're like, well, there's not a lot of setups in here. Like, okay, WDC, look, it's starting to range a little bit. It's creating higher lows. And it's kind of building a range here. It's bouncing and like kind of ping-ponging, right? But, it's whatever. Like they would probably pass on that. Like, well, hold on. Look at WDC. This thing is up about 900% in the last 10 months. What else is in this group? Well, maybe we should pay attention to these stocks. STX is another one that's in this group, and it's starting to range here. Another really strong stock's up about 600%. SNDK is the one that I was in up until today. Very strong stock. Probably one of the strongest out of them, 1,400% in the last 6 months. So, you want to look at that. You want to pay attention to the group. And we just keep going down, and it's like, all right, what stocks are gaining momentum? What stocks are picking up? Look at this thing. mRNA, it is a biotech, but just for example, right, it's going up about 140% in the last 2 months. That's pretty good, right? And it just pulled back. It just went straight down. It just cut through moving averages, creating lower lows. So remember that drawing I was showing you? This would indicate that the stock is no longer really in an uptrend. It's starting to kind of downtrend a little bit because it just knifed right through those moving averages. We want to see when it pulls back, holds up on those moving averages. But I was watching this stock up until it did that. When I see it in this phase, I'm like, oh shit, this thing is really picking up. It's headed in the right direction. So I'm going to watch it. And you see a couple days where it just keeps going. You're like, all right, starting to pull back a little here. Let's see if it consolidates. It pulls back to the 10. It goes up for a day. You're like, all right, maybe this will go up a little more and start to range here. But then it just kind of ends up cutting through the moving averages and falling off a little bit. So not the best. It's something I would probably kick off my list or move to a different list where it's not as prioritized. And then I would just keep going through. We can see USAR, another one. Made a little move up, about 50%, pulled back, broke out here, made another little move, 70%. Overall, it's made about a 170% move in a month or so. And it's starting to pull back, but it is creating lower lows. Not the prettiest, so, maybe worth a little bit of a watch. That's what I have this flagged list here for. In order for this to work, you got to click on this and then click on flagged items. And you can just click the flag here. You can uncheck the flag on here and then, or click it on here to add it. But that's basically what I would do. And, prioritize. So I have 2 lists, the focus and the flag. I mainly use the focus. You don't really need the flag. But just if you want to monitor like a bunch of shit, it's kind of like when you're more experienced with it that you would do that. But yeah, I just kind of monitor things, and I filter things by strength. So in my head, I'm comparing these stocks to a lot of the other stocks that are out there. I did make a video. My hair is like completely in my face. I did make a video on like how I actually scan. That was like a little bit more in depth, and like I went through scans, and I'll post some in the future of going through scans and stuff. I'm also going to post some of like the meetings from the Discord and things like that, just so you can see a lot of the process, because I'm giving you this information as a baseline, and I want you to apply that and go watch all the other stuff that I've posted and see what you can come up with from there, and like really learn how to apply it. So I'll be posting more and doing a lot of that stuff like in real time as much as I can. It's a little hard to go through scans and talk, because when I go through it, I'm just like oh, doesn't look good, Like I do it really quick. It's a little hard to narrate it, but that's basically what I would do. I'm going through here and I'm looking for strength. I'm looking for strong stocks. Now these are all meeting criteria because they're all strong stocks with a higher than normal, or a higher than average daily range, a minimum of $1, like top 2% of strong stocks. All the criteria is pretty good. You just got to filter them out. So this is filtering out the market for you, and then you filter out the list, and then you create your watch list. So I add stocks to my watch list based on strength. I add stocks to my watch list based on the way that they're acting, the way they're pulling back, how clean the move is. Like this, this is a biotech, but this is not like the cleanest. Like it's just a very sporadic, quick move up. Like see how it's like little candles, and then it's just like giant candles going straight up, and then it pulls back. It's like, all right, the range here is not the prettiest. Like it's not bad. I mean, if it wasn't a biotech, maybe it'd be considered, but it's a very, very sporadic move in a quick, like a very short period of time, followed by a pretty short-lived consolidation period. Like DXYZ, for example, when it made that move, it was a crazy move in a very quick period of time, but it pulled back properly and it set up properly. It really coiled up, so it's a lot better than that other one. But yeah, we would just go through, HYMC, I could see this is a gold stock. This is, curling up. Like, see how it's going up, and then goes up even more. It starts to range. It ranged back here a couple times. There's some entries I got on this. There's an entry right there. See how, it gets really extended, but then it pulls back to the moving average, creates higher lows, lower highs. Volume drops off. On this day, it breaks out, high volume, and then it pulls back a little bit again. Volume kind of dies off again, and then it breaks out again on high volume, pulls back here. I took it off this, very clean hourly setup, if you see here on the right. Higher lows, lower highs, very clean setup, and then it breaks out here. I bought it there, and I trimmed a little bit on the way up, and then you sell the whole thing when it closes under the 10. Obviously not the best example, because this one, the 10 was a little bit further down, and my exit on this was actually on this day, I believe. So there's a little bit of, bending the rules sometimes, but like I said, that's much more advanced, and that's not really something I can just cover in a YouTube video. But for the most part, when you're going through scans, you're looking for strong stocks, and you want to look for clean moving strong stocks that are potentially going to pull back in the future. It doesn't have to be a stock that's already building a perfect range and is pulling back and setting up and might be ready to break out, right? Like that's what I was looking for in the beginning, because I didn't really understand. But something like this, I create a price alert above the previous day's high like this. It's not the best range, but it is kind of ranging. It's going sideways. It made a pretty good move up, like 100%. It's pulling back. The volume's not really dropping off how I'd like it to, so I'm not like thrilled with it, but maybe it's worth a shot. Maybe it's worth a look. It's a really strong stock. It's up 1,000% in the last 10 months. That's what you're looking for, is the real strength, the real market leaders, right? Another real market leader, ASTS. This thing's up about 5,000% in the last 2 years. I mean, it just keeps going higher, right? So this is something you want to pay attention to. Watch how this thing pulls back. Watch how it sets up, right? Put in a list and stock the stock. Wait for these pullbacks and wait for these setups, right? You're just looking for the good pullbacks and the good setups on the good, strong stocks. That's about it. SCCO is another copper stock that's starting to range pretty good. I do think that other one we're looking at, TGB, I think it was, and ASM or ALM, I don't know. No, ALM is one that I own. ASM, I think, was the other one. And then, yeah, TGB. I think, TGB is ranging a little better. Out of copper, we can see TGB. I think it's ranging a little cleaner. It's got a higher ADR, lower market cap. Usually the lower market cap, they tend to be a little more explosive, especially the higher ADR. That alone tells you. But it is starting to range pretty good, right? It's kind of ping-ponging around here, and it's starting to coil up, right? We want to see, again, that move up. It doesn't have to be the perfect move up, but you want to see it pull back and do this exact thing that I was talking about, where they, really, 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 coil up, right? Let me get rid of that. And it just creates these higher lows and lower highs. And that's kind of what we're getting here. Not the prettiest version of that, but somewhat, right? I think ASM is a much cleaner version of that, as far as, how it's starting to look, but it needs some time, right? Like if we look at this thing, I mean, it looks like the range is almost incomplete. It looks like it's missing a lot. It looks like it needs to come down here and go up a little and come down here. Like it looks like it needs to continue to play out. But if it does start to go, I mean, it starts to go out of nowhere, right? It is what it is. You'd have to take it if it's continuing. But I would prefer something like this where it ranges for another week or so, which would be absolutely ideal, but not always the case. So yeah, that's basically what you're looking for in terms of watch this. Look for the strong stocks, put them onto a list, and then wait for those pullbacks and get ready to execute everything else that I was telling you in terms of when a breakout's ready, how to buy it when it's breaking out, when to identify if it's breaking out, how much to put into it, your trims, your moving stop losses, and then your full exit and stuff like that. And you should have a pretty freaking good time. I mean, I've been loving this entire system. What else do I have for this? I think that's about it. I think you just got to practice with the watch list and stuff, and you got to figure it out of what stocks you end up liking, and you got to look through a lot of stocks. You do this a couple times, like for do this like once a night for like I don't know, 2 to 4 weeks, and you'll pick it up pretty quick. It's not the hardest thing in the world. And you can always send me the tickers in the Discord too. Like when you guys are like, oh, is this one good? Is this one bad? Like I always help you out, and I tell you, no, that actually sucks, or hey, that's actually a really good one, and here's why, right? That's the main thing. But yeah, I think that's about it in terms of like scanning. That's pretty much my process behind it. And if you have any questions, let me know in the comments. All right, I got a little tired. It's now almost dark out. Where did we leave off? Okay, so we are with, we left off with this scanning. So I went over the introduction in TC2000, the breakout, entry and risk management, profit taking exits, and then scanning. So that's pretty much it for like the breakout as far as that stuff goes. But there's 2 more setups that I want to show you. So I'm going to give you these 2 more setups pretty quickly, and then we are going to... Where my program at, bro? Like, why is it black? And then we're going to go over the whole thing as a whole. So I'm going to show you a couple examples of some, complete, using all 3, basically. All 3 setups. So the next 2 setups are going to be the Parabolic short, which I trade with puts. So that's kind of like the Parabolic puts is what I call it. And then we have the EP, or like a news gapper. So a news gapper is going to be a variation of a breakout. This is another trend following system, or another trend following setup. So it's very similar, but it has a little twist to it. So this is very important. Like with this stuff, the most important about this is strength and a good group of stocks. So a great example of that would be when gold and silver were just going crazy, right? You would want to find a stock that's gapping up on news, or specifically earnings is usually where I get the good ones, in that group, right? So a gold or silver related stock, or some sort of basic material stock that was gapping up, for example. That's where you would want to be in terms of, what's it called? In terms of like how to choose the right stock for this. So back here, this is when SMCI was doing really, really good. We can see a lot of really strong growth, right? It starts to pick up, and then it really picks up. I mean, look at all the breakouts here. There's a breakout right here on this day. It makes a move up, it pulls back, breaks out here, it gaps like crazy, and it pulls back, and it breaks out here. And there's a couple breakouts throughout this run as it's on its way up. But the biggest thing here is that this stock goes sideways for, about, what is this, I think 7 months or something? It was 8 months. Okay, so it went sideways for like 7.5, 8 months, right? Now, when a stock's going sideways for this long, it doesn't have to be a good-looking breakout. Like, this is kind of just channeling up briefly, right? Like these lines aren't even really going anywhere. But it's kind of just sideways in general. And then it gaps up on this day. So you'll see on the scan, I have this gap scanner. In the morning, I go through this. So this only works pre-market. Looking at this now, you see 93 items. Only use this gap scanner pre-market, and this will find you the stocks that are gapping up. So the criteria for this is literally just a gap higher than 6%, a little bit of dollar volume, and then I put the ADR filter. So moves faster than 5% per day. Of course, you want to trade those 5 ADR plus stocks, and then it gaps over 6%. So when I see a stock that's in a good group and it's really sideways, right? Really sideways coming into earnings or something, or some catalyst happened. So overnight, earnings wasn't even here. Actually, this was an update on their guidance. So they basically, it's like pretty similar to earnings. They're basically like, oh, hey, we're going to make a lot more money than we thought. Like, we're going to give you a little heads up now. I don't know why they do that. I actually have no idea. But it does. And, I mean, they do. And you can see here, this day closes right there. Opening price is 11.6% higher. So it gaps up about 11.6%. This is the day that we want to buy it. Now, could there have been a breakout day here? Yes, and I did try this. It went up a little bit. It failed. It closed below the 10. I got out of it that day. Then the next, couple days, it gaps up right here. Very, very high volume out of the opening range. Again, this is because it's gapping up. Because these are gapping up stocks, they're always going to be gapping up. You just go straight for the 1 minute opening range high. So remember what I showed you on the entries for the breakout? When they gap up, you just do that first 1 minute candle, and as soon as that high is taken out, that's when you buy it. Stop loss goes at low of day. So that first 1 minute candle could form. There could be a couple that don't take out the highs, but whenever the highs of that first 1 minute candle are taken out, that's when you buy it. Stop loss goes at low of day. I usually risk somewhere around 0.5% to 1% on these trades. They're a lot less frequent. They're more common during earnings season, so quarterly ends, or whenever like earnings are rolling around. I think there's some that'll be rolling around in like a month or two. But every quarter, basically. You'll get them like 4 times a year. They come in waves. Earnings are kind of scattered all over the place for companies. They're not all like, okay, we got earnings this week, there's going to be a shit ton of earnings. It's kind of random, because I actually don't know why. I don't know why I said because, like I was going to tell you, because I have no clue. You'll notice also, I don't know much about the stock market. I don't know much about stocks. I just know how to recognize the right ones, and I know how to navigate the markets and be in the right stocks at the right time, which is all that matters. Trading's actually really easy. You just have to not do dumb things. That's it. You don't have to do hard things. You just have to not do dumb things. But anyway, so a very strong stock is, preferred. But the main thing is this sideways and then that gap up. And then this day you're taking it on the opening range highs. Same rules for trimming on your risk. So we can see, this goes up a little bit. A couple days in, whenever you're up 5 times your risk, that's when you sell a portion of the position, 20%, and then move your stop loss from low to break even, and just trail the rest with the 10. Now, this came into a parabolic short here. So that's a setup that I'm going to go over in the next video. But this is a way you can exit it here instead of exiting it when it closes below the 10. So you'll see kind of like you'll see it all pieced together. So basically, like, you're probably getting the right idea. Like, this is kind of like a breakout, kind of a earnings gapper here, news gapper. It gaps up here. You stay in that thing, and then you get a really good exit up here, and then you short the thing on the way down. I made a killing on this stock. I did really, really good. But, yeah, then we see another breakout right here. See how, it pulls back, and it does that thing where it's kind of ping-ponging, right? Goes down, goes up, goes down a little less, and then tightens up right here. That volume drops off. I bought it this day, and then it went up a little bit more and then closed under the 10 on this day. So we got a little bit out of it, but I bought it this day. A couple days in, you sell a portion of your position at the end of that day, move your stop from low a day to break even. You trail it with the 10, closes under the 10 here. Obviously, you don't know this setup yet, so you can't exit here. I exited here, but you would, let's say, exit here and then buy back here and then exit here again, because, goes up a little bit. Once you're up 5 times your risk, same thing. Take partial profits, move stop from low day to break even, sell the whole thing when it closes under the 10. So super, super nice way to do this stuff. And then later on, a report comes out that they had accounting errors and, their company was actually shit. So it all just gave back all the gains, right back to the sideways where it was. When it closes under the 10, these things tend to lose momentum. Let's see another one. So Root is another very successful EP that I had. Root was very, very sideways. Now, one thing you'll notice is stocks that are lower caps tend to do better. Not always the case, but they tend to be a little bit more explosive. Look, you see this? This thing freezes sometimes, I told you. Okay. Oh, and it perfectly went to the day. So Root, this is here on 2/22, I think. Yeah, 2/22/24. Wait a minute. And this was on 2/22/22, another really big winner, INDO, big breakout. This is a good one to study in 2022. This is 2/22/22, pretty weird day, and a really crazy big winner, like a super lucky number. That's a good one to study because of how it coiled up here and then broke out. You should go check that out on your own. Good looking breakout. It was growing pretty good. Anyways, back to root. So root pretty sideways, right? It wasn't super strong. It went up like 270%, and then really sideways along here. Not too sideways. It kind of fell off a little bit, but then it ultimately gapped up out of this range. So we can see it's totally breaking through like this whole zone here. However you want to draw this out, like I don't know. I kind of just drew it out like this. Like it's just above here, right? It's gapping up enough. Now, one thing to be a little bit cautious of is when a stock is gapping up more than 27% and is above or it is below a $1 billion market cap, it does have a really high chance of closing red on the day. It's about a 70% chance, unless it's Monday. Monday, the numbers are a little bit different. Not sure why, but something I learned from shorting small caps. But this one, because it's news related, it's a little more or it's earnings related, sorry, not just like a random catalyst. It's a little more prone to success. So this one gapped up 34%, 35%-ish. It was right there, a little bit above that 27% mark, but ended up working out okay. Because it was gapping up very clearly out of this sideways range, I ended up taking it. So I bought it this day, 1 minute opening range highs, a couple days in. This one went green for 14 days, about the craziest thing I've ever seen. But, a couple days in, when you're up 5 times your risk, I think I ended up buying it somewhere around like here on this candle because it ripped off the open. But yeah, a couple days into this, whenever you're up 5 times your risk, wait until the end of the day, sell a portion of your position, 20%, move your stop loss from low of day to break even, and trail the rest with the 10 simple moving average. So this was a really good one. Look at that. It pulls back here, sets up for a breakout, tightens up, volume drops off. You see these setups like absolutely everywhere. It's crazy. I don't know why more people don't talk about this, but I guess they just don't know what they're doing. Ultimately, it closes under the 10 this day. So if you bought it here on this breakout when it was breaking that previous day high, you would have actually lost money because you wouldn't have had a time to take partial profits and move your stop from low of day to break even. So you would have just ended up losing on that, which this is a good example of back when I was talking about like, when you see a winning trade turning to a losing trade, and then the next ones you're like, oh shit, I should probably lock in the profits because, I don't want to, like I end up like getting some profits and then I don't take them. I keep trying to hold them out. But this is just an example of like, it's perfectly fine to lose on a trade. You got to catch the big winners, right? This is what you're trying to catch. You're trying to catch a trend. You're not trying to catch a short-term burst and be a little like mouse getting crumbs. You don't want the crumbs. You want the whole thing, right? So back to that. That's kind of like why I've been able to hold out the winning trades for so long, and like the mental clarity of it for me is just like I don't go for little stuff like this. I don't care if it's up, a couple grand. Like it could be up like 10, 20 grand. I want a couple hundred, right? Like I want more money. I want to get a bigger win out of it. I'm not going to be like greedy with it, but I'm also going to know that the statistics of me having a low win rate means that I need to hold the trade out longer. So that's just what I do. But anyways, gaps up here coming out of that pretty sideways, right? You can see all this sideways activity, gaps up here. Same entry, just 1 minute opening range highs, and then you trail with the 10. You do your trim on the way up, however you like to do that. AOI, I think. No, that's not the best example. Let's do Lemonade. Lemonade is another financial services stock that was a pretty good winner here, and there's some breakouts on the way up actually. Another one, very, very sideways. Now, financial services was actually pretty hot at the time, pretty good group, pretty strong. This stock itself wasn't, but it was very sideways. I mean, it came straight down. It's not a very strong stock. It came straight down, and it was just very sideways. Another lower market cap stock. The sideways, to me, out of a news gapper or an earnings gapper is very important. I love how sideways this one was. Like, you see how, a lot of this is just going up and down, up and down. Like, sure, it goes up a little more and it comes down a little more sometimes, but majority of these candles are following along, like, a relatively strict area, and then boom, it just gaps up, and it's got a catalyst, and these things fly on volume. They always have really, really high volume. So the day after it reports earnings, what happens? It gaps up over 6%, gaps up 12%, and, you take the 1 minute opening range highs, a couple days in, you trim a portion of your position, probably at the end of this day. It did have a little setup here on the hourly, then it broke out. You actually could have just kept buying this thing, had a little hourly setup here, and it broke out. Another, you can see the volume drops off, breaks out again, drops off, breaks out again. Like, this stuff is really just everywhere. But let's say you initially took this and you weren't like a professional trying to extract the most out of it, so you just bought it here. Here, you'd probably trim a portion of your position if you're up 5 times your risk, depending on where you entered this. Move your stop from low of day to break even, and then you continue to hold this until it closes under the 10. And we can see another breakout right there. They're really everywhere. And then it closes under the 10 on this day, and we can see the outcome after it closes under the 10. Does the stock lose momentum? That it does. Let's see. QVT, I believe, was a QBTS maybe? QBTS was an earnings gapper that I took. Another one that was out of a pretty strong group. You know, these stocks were very, very, very strong, and this one was very sideways. See all this sideways activity? You know, it's building higher lows. I mean, this one's tightening up a lot. This actually looks pretty good. Volume's even dropping off over here, but another earnings gapper, right? It's completely gapping up out of this range. Like, majority of these candles are following along this area here, and then it gaps up this day. Same thing, 1 minute opening range highs. A couple days in, when you're up enough, you know, take partial profits, trim a portion of your position, 20%, move your stop from low of day to break even, hold the rest until it closes under the 10. And look at that. Look at how much it's fighting the 10. Look at that. You know, it's just barely staying above it, barely staying above it, barely. It's just holding it like crazy. It's just fighting it. And then this day ultimately closes under. So, you know, another pretty good one. These can make some good moves. Root made like a 300% move or something, I think, in a month or so. I've also found that a pretty good threshold for holding stocks is around like that 1.2 month period. I haven't seen many go too far past that. There's a lot of good breakouts here. Look at that. Breakout right there, breakout right there, breakout right there, breakout right there. Attempted breakout right here. Then you get gapped down and shit on. That sucks. It always sucks to be gapped down on. Yeah, breakout right there. But RGTI was the leader. Another thing you'll learn, you know, leading stocks of how to pick the right one. So stocks that are in the same group, for example, breaking out on the same day. Like it's breaking out on 10-2. QVT, or what were we looking at? QVTS was breaking out on 10-2 as well. But, you know, RGTI was a stronger stock and made a bigger move up initially. Yeah, that's breakout stuff. But anyways, for the earnings stuff, yeah, it's basically just, you know, a variation of the breakout setup. You don't need a really good setup prior to it. You just need a little bit of sideways action. Typically, they're better on smaller cap stocks, you know, in like the high 100 millions to like low billions, like below the 10 billion-ish. It doesn't mean that you can only take those, but I found, you know, a lot of success with those. I would take them all and get used to it, you know, get some practice in. But for the most part, I think a lot of my stocks in general, I found a lot of success around the few billion market cap range, high 100 million to like maybe 10 to 15 billion-ish, somewhere around there. I mean, I've had, obviously, as outliers, I've had good winners of all market caps and ADRs and stuff. But, yeah, let me see if I have anything for the news gappers. So it's basically, overall, it's just a variation to the breakout. Gap over 27 is prone to closing red, yes. And then I gave you guys some examples. I mean, you can always ask questions. You know, I can always find some more examples over time. You know, like I said, this series is made for you to ask me questions, so that way I can go over it in the end. Importance of themes. Yeah, so you guys know, that's what I started with. You know, the importance of it should be a strong stock in a strong group. Or if it's not a strong stock in a strong group, the group should be good. You know, like there should be some activity with the group or just a really sideways stock. I mean, the main thing you want to look for is a very sideways stock coming into that gap. And then it gaps up, and you're like, holy shit, it's breaking out of this, like, you know, it's super sideways for months, right? You don't want it to just be like, oh, it's been sideways for 2 days. Like, what kind of thing is that? Here's another post-earnings gap move. Sound was the post-earnings gap. Here's another earnings gapper here. See how this was like kind of, it was actually breaking out here, which is kind of weird. But it only went up like 50% and then pulled back. Like, this was still in a downtrend overall, so I didn't want to buy it here. But like, you see what I'm saying? Like, this was, you know, kind of breaking that range, and then it gapped up this day, crazy high volume. I bought it on 1 minute opening range highs, then it pulls back and it broke out a little bit, and then ended up closing under 10 here. But, you know, another pretty good sized trade on that. It's another good one. And the post earnings move was on Sound, so or the post news gap move was on Sound. So it gapped up here on news, very similar news to what the other one gapped up on. And then, you know, created higher lows and tightened up right away. So sometimes you get a gapper that closes red. I mean, this gapped up about 76% that day. So, again, really high chance that this was going to close red on the day, which it did. But it continued to hold, and it created a higher lows here and, you know, kind of tightened up. It just made a really good range there and then broke out. So you want to watch them for a couple days after they gap, even if they fail, just because it could have a lot of momentum and it could be carrying momentum, especially when you see a little upwards movement like this before. But this was not really gapping up out of like a sideways range. Like, you see what I'm saying? Like, is it sideways? I mean, you know, that's real debatable. Like, not really. It's not as sideways as something like Lemonade, you know, way over here. I mean, you can't get much more sideways than this thing was. Like, you're looking at that, it's like, holy shit. Or Roots, I mean, was pretty sideways coming into there. It did pull back a little bit and then kind of do some weird thing, like, towards the end. SMCI was super, super sideways here. I believe NVIDIA had an EP as well. Maybe not. I think this day. Yeah, this day was an earnings gap right here, and that did pretty good. But yeah, that's as much as I think I got for the earnings gapper. It's a pretty straightforward setup. It's just a little bit of variation of the breakout. It's mainly prioritized on that sideways consolidation prior to a gap. I'd say the best gaps are on earnings gaps or earnings related gaps. It could be like a guidance, for example, was SMCI, and then a lot of the other ones that I've had really good success with are just earnings in general. If it's not guidance, earnings is really common. And then what else? Yeah, it's just kind of a variation of the breakout. I mean, it's really straightforward. 1 minute opening range highs, gap up on earnings, sideways, good group, boom, you're done. You got to mess with it a little bit. You guys will see, as you continue to trade and learn this stuff, it'll be, it'll come with time. But yeah, if you have any questions, let me know in the comments. And next video is going to be on the parabolic puts. So that's actually going to be an options thing. And I'm going to show you how I do that with options and how I wouldn't do it with options, or how I would do it with shares instead. Because sometimes I don't do options. Sometimes I actually do shares on that. I'm not going to teach you how to actually short them, but you'll see. All right, peace out, bro. All right, so while that one uploads, what does it say? It says 2 minutes, but it's capped, because every time it says 2 minutes, then it goes to be like freaking 30 minutes after. It'll say, oh, upload complete, and then I go to click publish, and then it says oh wait, give me another 45. Are we serious? Anyways, let's talk about the parabolic puts. So the parabolic puts is a strategy that I use primarily with options. I do occasionally short them. I used to short them when it's much smaller cap stocks that are less options friendly. But when you have a larger cap stock that's doing really, really good, you get some good setups here. So, and some good risk to reward. So the thing about a parabolic short, right? So what a stock means to go parabolic is, let's pull up Paint real quick. Whoa, that is bright on my face. Whatever. Okay. Let's pull up Paint real quick. Wow, that is super, super bright. All right, so a parabolic move is, this is a linear move, right? We have a linear chart that's just going up versus a parabolic chart. A parabolic chart will start linear, and then it'll curl up. So a stock is, I can't stare at this for too long because this is just blinding me, but you get the point, right? There's linear, and there's exponential growth. So if you look at a chart versus a linear growth and an exponential growth, an exponential growth pattern is essentially what we're looking for in terms of a parabolic move. But yeah, a stock is like a rubber band, right? You stretch it out too much, it's going to snap back. So it does the same thing regardless of which way it's going, and I'll show you a setup actually on SPY as well. You can do this inverse. It works when a stock's going straight down. Don't look at the small caps that are going straight down. You got to be very specific with which ones you choose on that. So I'm going to be very cautious when it comes to teaching you the inverse version of it. But let's go specifically for the regular version of it. So here we have SMCI, right? Depending on the market cap, depends on how much the stock has to be up. So a larger market cap, like a 10 billion plus, should be up 100 to 300% in around a month or so. A smaller cap stock would have to be up, a couple 100%, sometimes even thousands of percent. So GameStop is a good example of a stock that would have to be up a lot because it's a much smaller stock, and I'll show you that. But SMCI was a 20 billion market cap, not where it is now. I think it was up at around 50 billion at the time, but a larger market cap stock, right? And over 10 billion, I would call that a large cap personally. But it got really extended, right? After this earnings gap successfully, it went up 200%. So when a stock gets really extended, you can see it curl away from the moving averages here. So when moving averages start to go vertical a little bit like this, and the stock is just doing nothing but going up, and towards the end of the run, it'll pick up. So you'll get a couple days of real strong closes, usually some gaps, and just some real strong activity. And then the volume will increase with it as well. So on this day, when you have it super, super high volume should be at the highest of its run. It should be up about a couple days in a row. It should be going up a lot and getting really extended. And then you have a gap up the next day. So the gap up should be significant. It doesn't have to be too crazy, but it should be decent. The next day, we got a little gap up here of about 3.7%. So not the craziest. I would personally prefer a larger gap than that, but it snapped back like crazy. Now on this day, because this was a Friday, I did 0 DTE options. That is very, 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 very sketchy. But these moves tend to last anywhere from 3 to 10 days, the parabolic move to the downside. So in this case, I was like, you know what? The first day is typically a very, very strong pullback. So what I would do is I target the 10 simple moving average. You can target the 10 and or the 20. I prefer to target the 10. I find that it most commonly pulls back to the 10 successfully. Not always does it pull back to the 20, but in this case, you have the parabolic move. So we have a stock that's up a shit ton, right? Multiple days in a row. It's just going straight up. This thing's just going up, 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 up. Gets very extended. Volume increases. Super high volume on this last day here. The next day, we're waiting for a gap up. Boom, it gaps up this day. And then the entry, I'll show you in a sec, but basically targeting the 10 simple moving average, I would pull up like Webull on my phone. I'd type in SMCI, right? SMCI. Boom, I'd click on this, I'd go to the options chain, I'd see, zero DTE because it's Friday. I'd click on that and I'd be like, all right, where's the 10? The 10's around like 77, like, give ourselves a little bit of room. Let's call it 80, right? And I'd get the 80 puts. So typically you would hold this for 1 to 3 days. Obviously on this, it's a little, you can't hold it very long. So I sell into extension intraday. I did make a video on my gold short and how I shorted that. So if you want to see like how I played that out intraday, because that was actually like a live thing. I shorted that, and the next day it went down even more, and I was still in the position. But basically, like, it did really, really good. Let me see if I can pull up the entry on it. So GLL, I sold it all on 130. So gold was parabolic recently, and I sold it all on this day. So on this one right here, we can see the exact same thing. Now, this was very extended, and it got a really good gap. Gold, everyone and their mom was talking about this, right? You usually get it when the stocks are very hyped up. So, for example, it got pretty extended here. It went up quite a bit, got real extended, but not a very successful one. You didn't get a gap up, right? So this day here, it didn't really gap up. It just kind of pulled back, and the next day you would have been stopped out. I'm going to show you what the entry and the stop is, but here we have it, going linear a little bit, and then it really curls up. And look at this. For a couple days, these 2 days right here, things are going straight up to the sky. Look at that volume curls up. Super high volume. Highest volume it's been in a while, right, except for back here. But highest volume of this run, right? It curls up, gets really extended, goes exponential here. Next day, gaps up. Now, that is perfect. That is so freaking beautiful. Next day goes, oh, my goodness. Like, wow. That was such a good one. Man, I'm very happy with that one. So the entry on this is going to be the 1 minute chart. It's going to be, and we can even go to see it. So we're going to use the 5 minute chart to show you the example. But the entry on this is either going to be on the 5 minute or the 1 minute chart. I prefer to use the 1 minute chart for all my entries. If you want to be a little bit slower paced, a little more cautious, then use the 5 minute chart. Now, this is going to look a little weird because VWAP is obviously not calculating with after hours data. It's just going straight up. But essentially, when it comes to opening range lows. So you have the day that it gaps up. Now the day that you would want to enter, or the time you'd want to enter it, so you have a successful, or you have a pretty good candidate that you have chosen out, gets really high volume, right? And the next day gaps up. That's the day that you would want to short it or get the puts. You can actually short this, or you can get the puts. You can also do, sometimes they have inverse versions. So I bought GLL. I just bought shares on this, and we ended up selling it like around here. I posted it in my Discord. You guys can go look through the alerts channel if you want to kind of see like how that trade played out. And watch, like I said, the other video. But yeah, so on gold, for example, right? If you have this day, so we have this day where it opens up, right? It gaps up that day. You're like, all right, here's where I want to short it. You wait for an entry. It's the inverse of the opening range highs. So we're going for the opening range lows. So on this one, I'm going to show you on the 5 minute because I can't go back that far on the 1 minute chart. But on the 5 minute, you wait for the first 5 minute candle low to be taken out. So you have that first 5 minute candle that forms, and then you have a low right there. As soon as it breaks through that, it should also be breaking through VWAP. So this orange line, which we can see it is. I mean, this is messing it up because it's going like straight up. But you can see like here, for example, like on this line, like it's going below VWAP. Does end up closing green, but stop goes at high of day. So it's basically the opposite of a breakout entry. It's just upside down. And if you were on GLL, for example, it would be the regular way. So first 5 minute or 1 minute opening range highs, you buy it here at this high, stop at low of day. So it'd be the same, and then you're targeting the 10 and or 20. Now in this case, it went all the way to the 20 in the next day. So it was actually really successful. And then you can sell into intraday strength. So when you have options that expire in a short period, you want to sell when they waterfall like this and when the volume ramps up. So I sold a little bit here, sold a little bit here, and sold a little bit here, right, when that volume was really like ramping up. So we sold a little bit, like 10%, 10%, 10%, and then I kept it and I swung the rest, and then it ended up gapping down and waterfalled again, and that volume really picked up intraday, and I think we got all out of it like around here-ish. What time? Let me see. At 1:27 p.m. I mean, you can't get much better than that. That was like right around here somewhere. Pretty freaking solid. Pretty good. So yeah, you get a stock that gets really, really extended. It curls up, really picks up on these last couple of days. The volume increases as well. The next day, you're waiting for that gap up. If it gaps up, you wait for the opening range lows on the 1 minute or the 5 minute chart. You short it or get the puts, whatever. You can target the 10. Like I said, I would go gold, boom, open my phone, go to gold. I type in, GLD. I look at the puts, options, choose, a pretty decent expiration date. Maybe give myself a couple days if I got some time. If not, give myself, close as possible. In this case, I'd probably give myself 2 to 3 days. So let's say I click on the 3 days. I'd scroll down. I'd be like, all right, the 10 is around 456. Let's say that inclines a little bit more for a day or two. Let's go with 465. That gives me a little bit of room from the 10. I go to the 465 puts. I see how much they are. I see how much they are in the money too. So 465s, for example, now they'd be in the money because the stock's at 463. But I would look at it and I'm like, all right, let's say these are $50, and then in the money down here, it's like, oh, the strike price that are in the money are $500 or something. So I'm like, all right, I can maybe get a 10x on my reward, or 10 times my risk, maybe 1,000% trade off that. That'd be pretty cool. For sizing into options, I never put more than 1% of my account into options because your risk is your entire position size. So you're not, buying a bunch. You're putting a very small bit of your account into it. Unless you're buying something like this, you can size accordingly. It's the same thing. You just do whatever it says down here. So for this, you'd buy it on the 1 minute opening range highs or the 5 minute opening range highs. You get a super, super tight stop. There's like a 1% stop on that day. Pretty crazy. You can get a whole 100% of your account, the whole account in this thing, while only risking 1%. Although it didn't go too high. It went up like 14% or something. Oh, it went up 30%. I wonder what my risk to reward was on that. Why don't we check? Let's check it out. Another blinding freaking page. GLL was, I bought GLL on what day? GLL was right here. I bought that on 129. Is that right? 129 and I sold it 130. Okay. Yeah, that makes sense. All right, so GLL, I bought it there. We got, what is our multiple on our risk? 10.6 or 10.16 times our risk. So that's a really, really solid trade. Cannot be upset about that. So you can do it, however you want to. Obviously, sometimes you can use the puts, sometimes you can use the inverse versions, or sometimes you can just straight up short the stock. But again, super extended right here. Gap up on the next day. You enter off the 5 minute or the 1 minute opening range lows. Stop goes at high of day. Now, of course, if you're doing this in reverse, you enter off the 1 or 5 minute opening range highs. Stop goes at low of day. And then, you sell a little bit throughout the day. Your trim is, again, you can use a risk multiple, or you can watch the volume and watch if this thing waterfalls. Sometimes they come crumbling down like this. This is a real good waterfall on this one. Starts off slow, and then it just absolutely dumps. GameStop's another good one that we had a really good we had really good puts on this one. If it'll unfreeze. This is a really crazy snapback in a couple days. So this one, a little bit different because it didn't take too much time for this to really pick up. But it picked up a little bit, right? It went up like 80%, and then it gapped up overnight another 50%, and then closed green by another 14%. So overall, this thing was up about 202% in a very short period of time. And then it was very, very high volume on this day. Next day, it gapped up literally like 100%, I think. Yeah, it gapped up 108%. I mean, that is like so prone to failure. Like if this did not close red on the day, I would be very, very surprised. And it did. It pulled back 45% in a day. I got the puts on this day off the 1 minute opening range lows, as long as it was breaking through that VWAP, right? That, orange line here. As long as it's breaking through this orange line and taking out the lows, you're good. And then you put your stop at high of day. You wait until this goes to the 10. You wait. It gaps down to the 10 right here because in this scenario, it gapped down. You sell the whole thing on this day, basically. So this was Tuesday, Friday expiration. This is the day the contracts expire. At the opening range, it's way down here. It gaps down. Stock made an ultimate move of, I don't know why I said ultimate, a total move of 64%. So in 3 days, about 3-4 days, this thing went down 64%. They crumble pretty hard sometimes. But yeah, that's about it for that. The inverse, the other one I was going to show you guys on SPY, is sometimes on the S&P 500, you get some, there's one right here. So see how water falls down, volume gets really high, or not too high, but then it gaps down like crazy. This is a day you can play the long back to the 10. It's just an inverse. There's another good one right here. This one was super, super extended. Pulls back, goes sideways, and then really rips down. So this S&P 500 was down in total 19% in about 1.6 months. Really, really high volume increases. Next day, gaps down. So instead of, it being extended to the upside and the next day it gapping up, it's the same thing, just upside down. And then you can see how it played out to the 10 and or 20 moving average. It actually kind of met them in the middle. So a really good one on that. You can do calls on that. You can do puts. Like I said, mess around with it. I'm not here to give you every piece of information, but I'm here to give you enough to where you can figure out a lot of things from it. What else do I have? I think that's it. All right, so if you have any questions about the parabolic puts, if you have any questions about anything in the video that I talked about at all, just let me know in the comments, and I will see you in the next one. Oh my goodness. I was supposed to do this way earlier today, actually yesterday. But this video, I just realized so much has happened in the last day. I got a haircut. I also got my eyebrows threaded. I don't know how many of you do that. Whatever. I'm going to do an overview of this whole process. So basically just start to finish going over everything that I talked about. I'm going to show you how it works in real time. Well, obviously I'm not going to show you because it's nighttime. The market's not open. I can't replay a trade that takes 30 days. But I can show you, some pretty good examples. So I have a couple in mind. I also got this today. So this is pretty sick. Yeah. So much has happened. But anyways, so where did I leave off? Where is my... That is so bright. Back to getting blinded. Okay, so far we have the... Okay, introduction and TC setup, so I don't really need to go over that. Like I said, you guys should be asking questions. I'm going to do that probably on Monday, so get that stuff in as soon as possible as far as the questions and everything, because I'm not trying to sit here and wait around. I want to get shit going quick. I want to start posting a lot more YouTube videos. I want to start really, doing what I can, because I realize I have a lot of potential and it just kind of goes to waste, because I don't post. I don't need to post. I just do it to do it. But I think, it'll be cool. It'll be a cool journey for me. It gives me something to do other than just living my regular life. But so the introduction and the TC2000, I'm not going to go over that. But we're going to go over the breakout. We're going to go over entry and risk management. We're going to go over profit taking and exits. We're going to go over scanning. We're going to go over earnings gappers. And we're going to go over parabolic puts. So I'm going to show you, I actually took an earnings gapper today. I took 2 of them. So I'm going to show you some real examples of stocks that I took today and why I took them. I'm also going to show you, some breakout setups and just where you would buy it, where you would sell some, and then where you would take full profits, how you would find that stock, all that stuff. So we're just going to go over all of that real quick. So let's start off with TC2000. Got to move the cam around a little bit. TC2000. Let's put this down here, and it's freaking half the screen. I don't know how big it's supposed to be. We'll keep it right there. Okay, so as far as the 2 stocks that I took today, let me actually put this over here for a sec, and then we'll move it again. But the 2 stocks I took today is AEHR and VRT. So VRT had a much stronger close today, as we can see on this daily candle, than AEHR did, but AEHR still ended up the day 6% positive. So not the greatest, but not bad. Not horrible. It did gap up overnight about 19%, and then it added another 6%. So I would have preferred that this candle closed, closer to the highs for sure, that it held up a lot better. We can see the intraday strength on this. It kind of made this big move up in the morning. I was up quite a few buckaroonies in the morning, and then it just kind of pulled back and just held from there and just went sideways. So we'll see what happens with this in the future, but let's actually discuss. Never mind. let's start off with the whole process. Okay, so the breakout, you guys obviously know the breakout. We're going to use BBAI as an example. I think this is a really, really good one. So BBAI, we're going to use as an example for a breakout. Now, as far as finding this stock, you would find this stock either, on one of these scans, 1 month gainer, 3 month gainer, or 6 month gainer. So you're going through these at the end of the day. Let's say, for example, I can go through this right now. I can look at S&DK, very, very strong stock. Makes a big move up, pulls back, goes sideways, makes a big move up, and now it's a very strong stock. This is a market leader. We're looking for the strongest stocks in the market. It's up like 1,600% in the last 6 months. Insane growth, a lot of attention here, and we can see it's starting to pull it back, and it's kind of building a little bit of a range here. You can see on the hourly, it's looking like it's going sideways somewhere along this area, right? We can see that. Majority of the candles are kind of touching within that area. So I'm like, all right, let's see if this thing is going to range further or what's going to happen. Then I would move this to my watch list. Then I would wait, I'd wait for this to tighten up, wait for the setup to kind of form a little bit better. And then as soon as it's breaking out, that's when I would buy it. VRT, that's one that I took today. Light looks like it kind of wants to consolidate here. We can see, this is a stock that's very, very strong. Again, another very, very strong one, up 1,200% in the last 10 months. We can see these candles starting to tighten up a little bit. The volume's kind of dropping off. This stock is starting to get near a consolidation point. How long is that consolidation going to be? I don't know, because it just recently paused and picked up again. Now it's starting to go sideways, but we see we're still getting, higher lows here on the hourly. So the stock is still trending up. I mean, could this be a little bit of a breakout? I mean, maybe, right? You can see what I'm seeing here a little bit. I wouldn't take it off that short of a consolidation period, but that's essentially what we're looking for. So we're going to watch this stock and see if this thing wants to tighten up a little bit more, let the 10 and 20 maybe catch up, maybe just the 10, maybe the 10 and 20. That's what I would do. So I'd go through these scans at the end of the day, build out my watch list, blah, 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 right? ASM, another stock that, I've been telling you guys about. I really wish that it pulled back a little more and started to range better. What do we know happened today? It pulled back a little bit more and started to range better. Now, I think the other day when I had mentioned this, that if ASM was breaking the previous day high, I would take it. So I could see today that ASM, the previous day high, was being taken out, but I did not like the way that this opening range looked. And the reason I didn't was because it was not very explosive. So I'm going to show you a comparable opening range of a strong breakout day versus a comparable opening range of a weak or kind of like a shitty breakout day. So we could see the opening range of this, the first 1 minute candle, it made like a 1.5% move. This is a 10% average daily range stock. On average, this stock moves 10% per day. We're moving me up in the top left for this. We can also zoom out and see this first 1 minute. Although this looked like, it kind of wanted to take out that previous day high, that first 1 minute was already taking out the previous day high. So we're just waiting for that high to be taken out, right? Essentially because it's breaking out of its range. But I avoided this one. I avoided this because I thought it was a bad trade. If it took out 1 minute opening range highs, which it did on the second minute, I could buy it right here and stop could go at low of day. I would have lost on this one. And I avoided this one because if we zoom out a little bit, we can see that this volume is really not abnormal. This is a pretty normal volume, right, on the 1 minute chart. We see that first 1 minute candle. It's like, this isn't really high volume. There's not much activity going on. I could see relatively quickly that there wasn't much activity with this stock, just the way that this first 1 minute candle moved. It's only up 1.6%, 1.5% something. It's a 10.5% ADR. The opening range should be pretty active, right? And this opening range was, beyond inactive. I mean, it really only went up like 2.5%, 2.25%. You would have been stopped out, literally like 2-3 minutes after entering. So you would have taken a loss on that. Not a super, super bad one. It is what it is, depending on how much you risked. But let's take a look at AHR and the opening range on this thing, because the opening range on this was, significantly better than the opening range on ASM. So we saw right away, AHR, this first 1 minute candle, let's zoom out and let's check out the volume compared to these previous days, right? So the volume compared to these previous days, holy shit. I mean, this is literally like, I don't know, what's that? There's some building in New York that's tall. I don't even know. You drop a penny off it and it'll like kill someone or something. Anyways, it looks like you drop that in like, the middle of a city that only has 1-story buildings, right? So there's the tiny little volume bars compared to this extremely high opening range volume. It was already almost at average daily volume within like a couple minutes. We could see that on the daily chart even. The volume was looking high in the first like couple minutes. I was like, holy shit. Crazy volume. And this is also a 5.6% candle. 10.7% ADR, 10.69. And half of that ADR already in one minute candle. As soon as it took out that 1 minute high, I got a really good entry. If you guys were on the live this morning in the Discord, you saw my entry was literally like right here, like the second this 1 minute high was taken out. And if we look at that on the daily candle, you know, my entry is like right around here-ish, and it went up all the way up there, so I was almost up like 2 times my risk, and then it came all the way back down to kind of where my entry is. So I am up a little bit on this thing right now, but a sliver. It is what it is. It's a swing, right? I go into these trades aiming to hold them for multiple days, so I don't really care. This is a great example of an earnings gapper. I'll go over that in a second, but first, let's go over, you know, the whole breakout thing. So we're going to start with BBAI, the one I was showing you earlier before I distracted myself. I tend to do that. You'll notice that a lot. But yeah, so essentially you would find these in the 1 month, 3 month, or 6 month gainer, as I was kind of showing you a little bit. You know, you start to see a stock that's gaining momentum. It's growing over time, right? And you see, holy shit, it's up 140%. You know, it starts to pull back a little bit. It's building a range. You want to see the stock make a big initial move up, and then you want to see it pull back, creating higher lows and lower highs. So exactly what I've drawn out multiple times, right? We want to see it kind of ping pong in a sense to where it creates a tightening range where it has these higher lows and lower highs. So the stock is coming to a pinch. Now, as it's doing that, right, as it's doing all of this, you want to see that the volume is also slowly but surely dying out. So as it's going sideways and building that range, the volume is slowly but surely dying out. And then on the breakout day, we want to see a high volume breakout day. And on that breakout day, if it's gapping up out of the range, you just go straight for the 1 minute opening range highs, like kind of how I just showed you on AEHR. And if it's not breaking up, or if it's not gapping up out of the range and it has not broken the previous day high yet or broken out of the range yet, then you wait for it to do that. So it could open down here, for example. You know, the previous day would have been a pretty good example. Like if this is opening here, you're not buying the 1 minute opening range highs. The stock is not breaking out. But as soon as it starts breaking out, if it's breaking that previous day high as well, it's probably breaking out. As long as, you know, you have some sort of idea of where this stock is. Like everyone's trend line is going to be a little different. So if it's breaking the previous day high and it looks like it's breaking out of the range a little bit, you know, it's probably good to go. Obviously, you'll learn more with that the more you trade. But for this example, you know, you'd wait for it to be breaking out of the range. Let me try to think. But yeah, and then, you know, once you get into the stock, you buy the 1 minute opening range highs or you wait for it to break out, whatever it is, you buy it. Stop loss goes at low of day. On your broker, you do an advanced order if you can. Not all brokers have that, but if you have a group order or an advanced order, you do a market plus take profit / stop loss order. You turn off the take profit option, and then you have the stop loss set. Stop loss goes to low of day. You can look down here in the bottom left-hand corner to see the low of the day really quickly. It'll tell you how many shares to buy, how much that'll cost you, and then you type all that stuff in. You always set whatever you can to good till canceled. If it says day or good till canceled, if that's an option, change it to good till canceled. Obviously, the buy side order is typically only going to allow you to do day. Can't really do a good till canceled buy order, at least for market orders on the broker that I use, which is Webull. But your stop loss can always be set to day or good till canceled. So always do it good till canceled. Now that you're in the position, you know, you bought it, right? Bought it maybe here, stop loss low a day. You calculated your position size, you did all that stuff. Then you hold the position until you're up 5 times your risk. I mean, you know, we're looking at a 5 times risk, probably somewhere around here, right? So then you wait until the end of that day. When you're up 5 times your risk, like on that day, you don't just sell it the second it hit 5 times your risk. You wait until the end of that day, so a couple minutes before the market close. I have an alarm set, so I'll check up on my positions, whether I need to sell them, trim them, do whatever. So in this case, you know, I would trim about 20% of my position, and then I would move my stop loss from low of day to break even. Break even just means wherever you bought the position at. So if I had an average cost of 4.71, 4.71 is my break even. My break even is most likely going to be different than your break even because we're not pressing buy at the exact same second. Yeah, and then in order to move your stop loss, in order to trim a portion of your position, you have to go into your open orders. You have to cancel that order because it'll be a group order where it has the buy and the stop loss. So you have to cancel the stop loss. You got to cancel, you know, whatever it is. Even if you just have just a stop loss set, you have to cancel that stop loss or modify it. So let's say you have 100 shares. You modify it down to 80 shares if you're going to sell 20% of your position. Or if it's a group order, just cancel the order as a whole. And then you would just go in and sell 20% of your position, and then you would go back, click sell to close, create a stop loss, or you would do like the order type as a stop, and then do the stop loss at break even. So if you bought it 471, 471 is where you're putting it at, and then why did I just like lose my train of thought? And then 471 is where you're putting it at, and then you would just literally keep the position. Like you don't have to do anything after that. Also set it to good till canceled. And then you keep the position, you hold it for multiple days, you keep trailing it. We're trailing it with the 10-day simple moving average. We keep watching, we keep watching, keep watching. This day, you have an alarm set at the end of the day. I have mine every single weekday. At the end of the day, I'll check up on it this day, 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 all of them. And then this day, I'm like, oh shit, it's finally closing below the 10-day simple moving average. This is when I sell the entire position. So we get a trim right here, and then the entire sell is about 10% higher. So our first initial trim here in this case, is not that far from where we actually exited the stock. You do lose out on this 45% move up. So there's one thing that you can do, which is, adjust your trims. Like I've said, I'm not going to give you guys like rules on that because it's kind of discretionary. So you got to learn this stuff a little bit. I could say, sell into strength, but what does that mean to you if you're new to this? It's something that you learn, like I said, in the Discord. I keep freaking saying in the Discord, but like it's different when you guys are trading with me in real time versus in a YouTube video. It's a lot different, trust me. But yeah, that's how you would do it. Now, an earnings gapper, SMCI, is the exact same thing. Your entry is always going to be 1-minute opening range highs because these stocks are gapping up. So they're always gapping up out of the range. So it's always 1-minute opening range highs. So we have a very strong stock and a very strong group. At the time, SMCI and NVIDIA were very, very strong stocks. I'm not sure what SMCI does. I don't know what NVIDIA's role was back then. I think it's some sort of like maybe the AI stuff. I don't remember what was going on in 2023, 2024. I'm assuming, it's not too long ago, so probably some sort of AI stuff. But this one, super, super sideways coming into earnings. This wasn't actually an earnings report. This was a guidance report or something like that. Again, I don't even know what that shit means. But, it had something to do with earnings. It basically means, hey, we're going to report that we're making more money or something. Our earnings are projected to be better than we thought or something like that. So it gaps up out of the range as long as it's gapping 6% or more and it's coming out of a sideways consolidation period. Then you go for the 1-minute opening range highs on this, and then same thing. So 1-minute opening range highs, stop at low of day. A couple days in when you're up 5 times your risk, that's when you sell a portion of your position. At the end of that day, if you're up 5 times your risk, then you sell 20% of your position, move your stop loss from low of day to break even. Do all that whole thing where you're canceling the orders, making sure it actually works. You'll run into issues, and it'll tell you, hey, you can't do that. So it's not like you can really mess it up too much. But I'm just telling you guys how to get over that. And then you trail this with the 10-day simple moving average. But hold on, wait a minute. We get a parabolic short here. So parabolic puts, parabolic short, however you want to call it. The stock starts gaining a ton of momentum. So what we can do on this day, because we see it get really, really extended, is the next day, if this gaps up and gives us that parabolic put opportunity, then we can sell our entire position when we enter the short. Now, obviously, you have to be a little bit cautious with that because selling the entire position sometimes can backfire on you, and I'll show you an example of where it backfired on me because I thought that it was a high-quality short setup, and I was confident in entering the short and exiting my long when I should not have because it didn't actually play out like that. But in this case, you would exit it here rather than waiting for the 10. So that's kind of how you combine those two, which is why I wanted to do this overview type of thing. Sometimes you'll have a breakout that turns into a short. Sometimes you'll have, just a short out of nowhere. You're not even in the stock. You're like, oh shit, this one's going straight up. Like MSTR, for example. I'll show you that one in a second. But, you enter on that 1-minute or 5-minute opening range lows as long as it's breaking VWAP. Stop goes at the high of the day. You target the 10. You put your strike wherever, like I showed you in the other video. So you can exit them here if you have a very, very high confidence in the fact that this is actually a good short candidate. Not always is it, and like I said, I'll show you in a second. I'll show you now, but or actually, regardless, right? If you were in this, you did all that stuff, then you sell it when it closes under the 10-day simple moving average. This day, it's too close. It's not closing under the 10, but this day it is closing under the 10, so that's when you would sell the entire position. You wait, you wait, you wait. This thing tightens up. What do you know? It tightens up even more. Breaks out on this day. It's breaking that previous day high. It's getting some high volume. Stock pulled back. As it pulled back, the volume dropped off. It created higher lows. It tightened up. We had some thin candles, and then it broke out on this day. You buy it on 1-minute opening range highs and or when it is breaking that previous day high or clearly breaking out of this range. And then stop loss goes at low of day. A couple days in, you trim a portion of your position when you're up 5 times your risk. Trim 20%. Move your stop loss from low of day to break even. Trail the rest until it closes under the 10-day simple moving average. Closes under the 10 right there. Your exit is actually lower than your trim. So in some cases, your trims are actually going to be really good. In some cases, they're not. Because you could have taken a trim here, for example, and then it goes up another 117%, and you're like, oh my freaking goodness, I wish I didn't trim. So that's why keeping your trims light in the beginning is pretty good, and doing only 1 or 2 trims. Like I said, you got to mess with it. But MSTR was another one that had a parabolic short right here on this day. So a very, very extended stock. I did actually end up getting in it on this day, and I believe this day as well. But this day, until it closed under the 10, about 13% higher, so not much of a profit there. But then it got super extended, pulled back, and set up here a little bit. When they have a lot of momentum, I tend to take these shorter-lived consolidation periods, but it's very rare. This is technically a breakout setup right here. Very complex one to spot, but you can see the volume kind of drops off a little bit, and then on this day, the volume comes back in, when it's breaking that previous day high and or the 1 minute opening range highs, depending on where the thing's ending up. Buy it, stop at low of day, a couple days in. We have a parabolic short. Not even a couple days in do we have to trim that risk down, right? It's pretty obvious on this one. But let's just say you're looking at this from a regular standpoint. This thing's just going up, 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 and then it really curls up, gets real extended from the moving average here. It goes from that linear growth to an exponential growth, like I said before. And then we get that volume that really increases, super, super high volume this day. The next day, if it gaps up, this might be a pretty decent candidate. Next day, gaps up about 13% on the 1 minute or 5 minute opening range lows. As long as it's breaking below VWAP, that's when you enter it, and then you target the 10. This one smacked the 10 in literally a day. And that was that. Let's also go to, we're going to go to gold, actually, because gold ran into a much better parabolic short than silver did. So gold, back here, gold. Gold broke out on this day right here. So big giant move up. Well, you can see a really good flag right here. Look at that, higher lows, lower highs, something like that. This isn't the best drawing, but you can see, right? Gold made a really giant move up here, pulled back and went sideways for about 4 months, and then broke out on this day, and then made a really good run. It held the 10 the whole time, pulled back again right here, kind of picked up again there, and then finally had a little bit of a short. This one was a really weird one. But then it pulled back, went up a little less, pulled back a little less, and tightened up here, creating higher lows and lower highs, built a tightening range here. Candles got really tight. Volume dropped off as it went sideways, broke out this day. So you do the same thing. As soon as it's breaking through that range, you can see it's breaking previous day high as well and breaking through this range. You buy it somewhere around here. Stop goes at low of day, and then you trail this with the 10-day simple moving average. This one got real close there, but ultimately kept going, closes under the 10 here, so you exit the position there. Now, this one you didn't really have an opportunity to get back in because this range area was weird. You guys saw on silver it was much better, but silver didn't have as good of a parabolic short. So then here we get a stock that gets real extended. What do we know? Volume's super high. It's starting to curl away from the moving averages, right? This is no longer like that linear growth. Now it's picking up and going exponential. It's really just curling up like that. It gets really, really extended from moving averages. Volume gets really high. If the next day gaps up, what do? I mean, I think we know what to do, right? I went over it like a billion, jillion times, but you short it here, on the 1 minute or 5 minute opening range lows, as long as it's breaking below VWAP, and then you target the 10. We can see this one came crashing down. Epic. I ended up selling it like around here at the 20. Pretty crazy move on that one. Really, really awesome. And yeah, that's basically what we do. So go back and look at some charts, figure out what is going on with this after hours. Go back and look at some charts and figure out some breakout setups. I've got a bunch posted all over. If you look at all my YouTube videos and just talk to each other in the comments or something. Share setups. If you guys have ones that you want me to look at, share them in the comments. I'll look at it when I'm doing the questions video and stuff. Whatever it is, I'm here to help you guys. But just go and look back at charts. Look at stocks that have made the biggest moves over the last 10, 20 years, whatever it is, and see, did they end up pulling back and setting up for a breakout prior to their big moves? You want to see a pretty cool thing. A lot of people were talking about GameStop and like, well, how do you know when GameStop's doing that? How do you know all of this, right? How do you know this? How do you know that? Well, GameStop had multiple breakouts prior to its major run. This is a stock that you 100% should have been in. Extreme growth. This thing is up 400% in the last 6 months or so. What does it do here? It's a little bit harder to spot, but it does have thin candles right here and then a breakout on super, super high volume. So it's a little bit of a variation, a little harder to spot, but with the momentum of this thing, it's like you don't want to miss out, right? Thin candles and higher lows are a great indication. Overall, the thing was trending up, pulling back to moving averages pretty well. Attempted breakout on this day. You easily could have bought it this day and you wouldn't have been stopped out or anything, but you could have added to it more here Obviously, this day it was like ripping on open, so it's a lot harder. But yeah, you can see like it breaks out kind of on this day. Like that's not too hard to spot. This one's a little bit more difficult to spot, like to see this as a setup because it's just two consolidation candles. But it on the hourly and everything, it looks pretty good. And then it broke out here, and then what happens? If you missed it there, what do you know? Higher lows, not really. Like the top's kind of like higher highs in a sense, but higher lows a lot. The hourly look pretty good. Volume drops off, and then it makes another big move. Breaks that previous day high, you buy it here. Stop goes at low of day. You get a pretty tight stop on that one. A couple days in, you trim when you're up 5 times your risk. Move stop loss to break even after you trim 20% of your position, and then you sell it when it gets really, really extended. You would go for the parabolic short. In this case, it actually did not have parabolic short. I thought that this day was going to be, but the issue with this was the volume wasn't at its highest. So you see how it did get really extended, right? This thing really curled up like crazy and went straight up to the sky, but that volume was not pairing up with it. So I did not short that in that case. I showed you guys the one I shorted, and then it ends up going back down here. Regardless, this thing went from here to here, made a 948% move in about 5 days. I mean, you can't be mad about that. Let me show you the one on sound. The one on sound where I shorted that I probably shouldn't have. That was this day right here. Now, looking back on this, like I shouldn't have because it wasn't that extended. Like this stock was only up for like a month or so. And it was only up like 2 days in a row where it wasn't that far from the 10. Like looking at this, it's not, I mean, it's there, but like there's a lot of consolidation and stuff here. Like it's really just picking up even more. It's probably ready to pull back, if anything, here and then consolidate. Like now looking at that, I mean, this was not that long ago, so I'm kind of like, I remember I was like kind of beating myself up for it because I'm like, that's such a stupid mistake. Looking back on it, like even after like a couple days, I'm like, there's no way. Like I don't know why I was just so antsy for a short. But I bought the thing back here, and I was in it here. It was up like 100%, so I sold all my shares the next day when it gapped up, and I got an opening range low break, and it was breaking VWAP, so I shorted it. The volume was really high, and I was like, if it gaps, this thing could come pulling back pretty hard. So I ended up shorting it there, and then I got stopped out. It closed green on the day, and then it pulled back and built a range, and I did not buy it back here, I don't think. I don't remember, actually, but I don't think I did. I should have, but you could have bought it here, stop at low of day, same thing, couple days in, trim a portion of your position, then move your stop from low of day to break even, and then sell the whole thing when it closes under the 10 right there. But yeah, that is, a couple mistakes that I made in the past. I think that's pretty much all for my overview and my recap. Like I said, please freaking ask questions by Monday. I really want to get this stuff moving forward, and then I'll figure out more videos to post in the future. I want to do more YouTube stuff because it's a lot more in-depth. My TikToks are only 10 minutes at most, and TikTok's kind of been crappy lately. It's not getting many views. I think they changed the algorithm or something, or some company bought them. I don't know. I've been seeing all sorts of stuff, so let's just say I'm not a fan of TikTok at the moment. And honestly, I think speaking my mind, because I do tend to ramble a lot, YouTube's probably a better platform for me. And I think I've learned a lot of things from people on YouTube rather than I have learned from people on TikTok. So it's kind of like I'm just going against myself because this is almost a chore to me because it doesn't make me money. But I think it'd be cool. I think it'd be a cool challenge, and I'm totally open to it. I think 2025 was the year I said I would get my 100K subscribers plaque, and I didn't do it. So I think I got to do it this year. Keep me busy, right? But yeah, that's pretty much all. Hopefully you guys enjoyed this. And what else am I going to say? Hopefully you enjoyed it, and hopefully you make some freaking money, and hopefully, you learn this stuff because this is really good. I've been doing this for the last 7 years, and I've had a lot of fun doing it. The way that I see this, it's the same way as, playing a video game that I don't want to get off of. I've used that analogy a lot of times. It's just very interesting to me. So if it interests you, cool. We'll be good friends, and we'll be on our yachts together. All right. I am out of here. That's pretty much it for the series. Other than that, we'll do the questions, and yeah, that's about it. Later, guys.